I'm not going to get into this rat race. The health insurance industry did not really stand up and deliver. This group health insurance is the rapidly growing piece. This is growing at about 15-20%, maybe every year. I think what we need more of is public spiritedness. I think India will never have enough doctors to take care of all our 1.4 billion people. At no point in time will we have that. That supply side, if you look at physical capacity, it's not going to happen.
Welcome, everyone. It's my great pleasure to have Shiva. Everybody will call him Shiva Krishnan, but for us, he's Shiva, to the podcast. And it's a real treat to have Shiva. He's an IIM Ahmedabad graduate of 1998. Like Subbu, the chief economic advisor to Prime Minister Modi and then the director of IMF said that the Indian economy is going to grow from the current $4 trillion in size to $55 trillion. We will need people like Shiva to come to the episode and share the experience to help the current generation of entrepreneurs in India. There'll be a lot of crore-patis created in India, and it will require people like Shiva to come and tell about what are the current problems the Indian economy or the sector that they specialize in has. And this will present to you as a case study that people can then use for business ideas. And a crore-patis, that's what India will create. Will go from 4 trillion to 55 trillion. That's one aspect for this podcast. The second one is that India will also need a lot of managers. So Shiva will share his experience about, he runs his own company now. He's going to share his experience about how he grows managers in his company. Kaise managerial talent ko develop karte hain. And though it's far off, he entered IIM Ahmedabad in 1996. But hats off, he needs to be 0.1% of Indian brain power to get into IIM Ahmedabad. And he'll share with us, though very long time back, what are some of the things he did to prepare for IIM Ahmedabad at that time. And that will also help us develop more managers in India. So at the end of the day, we are here. Both Miglani is at least post-money. I call it post-money because the guy doesn't need to work anymore. He's a venture capitalist in London. I still need to work here in Silicon Valley. But we are here because we want to give back to our country and we want to make the dream of our countrymen come true. And we feel we have an obligation to the country to give back. And the way we give back is by bringing people like Shiva to share his experience, which will create a lot of crore-patis, a lot of entrepreneurial talent. It will bring that out from the country, and it will develop managers and managerial talent. So with that, Shiva, I know that you've been working in the healthcare industry recently, and you have your own company in the healthcare industry. Do you want to start presenting to us what the healthcare sector in India looks like, how it is doing, what are the, like we used to call it the SWOT analysis, the strengths, weaknesses, opportunities, and threats in this industry, and where are the opportunities for new entrepreneurs?
Okay, sure. Before I start, thank you so much for having me on the show. Viks and Migs have been extremely flattering in their introduction of me. I must say this. If I can play a very small part in what your ambition is, that, India needs to have many more crore-patis, I'd be very happy in contributing to that, because I'm not one, to be honest, right? Okay, maybe Migs is, maybe you are on the path. I'm not there. That said, I think I have a lot of experiences which I'm happy to share, which I think your viewers and all the aspiring entrepreneurs in this country will kind of relate to. Feel free to discard what is not relevant, because I think everybody's story is unique, and it is important for us not to glorify any one story, at the same time not dismiss any other story. I think the important thing is to try and see if there are any points that you can relate to, and if it strikes a chord, then take home those as your learnings. I think that's what I would say, fundamentally, right? So given this as the background, you said healthcare. I think healthcare is too wide an ambit. I'm specifically focused on health insurance, right? Because, and the interest in this spiked during COVID, because if you notice, during COVID, when there was huge uncertainty about whether somebody would live or not, or whether if in case somebody contracts the virus, would you have access to healthcare? And then post that, what the cost of healthcare would be. The health insurance industry did not really stand up and deliver in those trying times, which is what made me dig deeper. And what made me also dig deeper was my familiarity with the sector, because I was part of the sector when it got privatized in 2001. I joined ICICI Lombard as part of the founding team in 2002, and I was there for a good 4.5 years. Okay. So I was familiar. I knew what the fault lines were. I was curious to know why they did not really deliver at that point in time. In fact, what actually happened was you found people buying a lot of what we call top-up insurance in those days because it was completely anxiety-led. Because the buzz was that, listen, if you get hospitalized, you end up paying 30 lakhs, 40 lakhs, if at all you get a bed. And then your typical insurance coverage that you have, either if you're employed from your employer's side, is about 3 lakhs to 5 lakhs. So what happens to the delta? So therefore, people started buying top-up insurance, which was over and above what their employers would give them. This was typically an urban phenomenon because we're talking about somebody who had access to insurance. But then even this sector, which is typically educated, typically is aware of what the category is, stopped renewing this top-up program 1 year down the line when the anxiety dropped, right? So the industry showed, I would say, a false spike in penetration and the growth numbers and all of that. And everybody was gung-ho saying that, hey, listen, COVID actually has been an inflection point for us. Sure enough, it is an inflection point because the awareness spiked. I don't think there was something, the lack of comprehension of the category resulted in people not adopting this category and sustaining this. So it was not a lifestyle choice that people made. It was anxiety-led response to the entire problem, right? So, which is when I looked at it and said that, you know what, this category seems to be stuck in the past. I think much has changed in the last 20 years that I'm aware of, to be honest. I'm sure, no offense meant. I'm sure every company is working hard. In fact, the phrase that I like to say often is that people are operationally fatigued running this industry. Right?
Yes. Yes.
It's a hard industry to, ensure that, everything runs. You have to keep yourself within the guardrails. There's a regulator on one side. On the other hand, you've got the entire healthcare system, which poses new risks, right? In terms of new diseases that come up, new infections that come up. So how does somebody which is actually in a risk transfer business of trying to protect you gauge what the claims are going to be? So that itself is a big issue on the healthcare side, the supply side for an insurance company, which delivers the cost, which is the claims. On the demand side is, you have people who are still not aware of what the product is. There is awareness, but there's no comprehension. And you have a regulator which is, breathing down your neck saying that, listen, I want you to do more. I want you to push penetration. In all of that, if you look at it, the sad story is that individual penetration is not moved. Right?
Can you repeat that last sentence again? Can you repeat that last sentence again? Individual penetration has not ramped up.
Penetration of individual health insurance in this country, or what is technically called retail health insurance, has not moved up significantly, right? Okay. So the category grows at 20%. It is the fastest growing category amongst the general insurance space. So you typically will see the value in value terms, it will double in every 4 years, 4.5 years at that kind of CAGR that it has. But the most of that value growth is coming from price increases.
Okay, just pause there for a second. So Shiva, everybody, you're from IIM Ahmedabad, so you can say 20% annual growth means double the size in 4 years. But for other viewers, I'll tell you how Shiva did it. So Shiva knows the rule of 72. So whatever is the annual growth rate, to divide that by 72, and you will get approximate number of years that the category will take to double. And that's how Shiva was able to come up with that answer very fast. And another thing Shiva pointed out, which is very valuable, is this idea of operational fatigue. And what Shiva is again coming from is his MBA education, where in most businesses, people end up being operationally fatigued and strategically lazy. So you're not willing to talk about this, how do you solve a problem strategically, but you're like, whatever you're doing, do it faster, do it more, do it faster, do it more, and there's operational fatigue. And what Shiva is presenting... I think
I completely agree with what you're saying. In fact, I have a different terminology for it. I call it operationally fatigued and cognitively lazy. Okay? It's both.
Yeah, or strategically lazy. I call it... but it's the same thing, Shiva. You're absolutely correct.
Absolutely.
And what Shiva is showing us here, so for all the entrepreneurs out there who want to use this intelligent person, Shiva, who is here with us, understand this, the difference between operational fatigue and strategically lazy. You want to be strategically, you want to be working hard and not operationally working. And what Shiva is doing is laying out a framework of how he's identified the problems in the healthcare insurance industry, and now he's going to come up with his strategy and so on. So Shiva, please continue. Very interesting.
Okay, so arising out of that, I looked at, what the different segments are. And I think, the loose brick in the wall, so to speak, which is ripe for disruption, is what is traditionally called group health insurance. Okay.
Okay.
Right. So this group health insurance is the rapidly growing piece. This is growing at about 15-20%, maybe every year. But there is no pricing power the insurer has on this.
Okay.
The engagement between an insurer and an employer, for example, who's basically the one who's creating the group, is there is no bargaining power the insurer has completely with the employer, right? Because
Shiva, I have a question, and not just for our viewers, but also for me. When you're saying group health insurance, is this the insurance that I'm an employee and my employer is saying, okay, as part of your CTC or cost to company, also get X% of health insurance or life insurance?
Absolutely.
Is there any other is that the only segment in group health insurance?
See, group is a slightly umbrella term. See, you can create a group for any set of people and form a group.
Okay.
One of the groups is the employer-employee group. The employee group, which an employer is the anchor for. Okay. And if you look at group insurance today in this country, I think about 18 crore to 20 crore people are covered by that. And if you look at private sector's contribution to that, my sense is about 40% of that figure.
Wow. That's very impressive.
Yeah. So 7 crores is the number of people who are covered under employee group insurance. Okay.
Yes. I'll just share some numbers with America. In America, around 60% of American population is covered through employer group health insurance. So like Google goes out and buys insurance for all its employees at Google. Correct. Facebook goes out and buys insurance for all its employees at Facebook. So 60% of America is covered that way. So that means America has around 400 million people today. So around 240 million people are covered that way, which is around, if you convert it to India, it's around 24
It's a closed loop system, right? You have a provider system there, which is traditionally called the HMO system, the healthcare managed organizations, right? Which means once you're part of the network, then anything that happens to you is taken care of. Okay, number one. Two, there is a cost that you pay, which is very nominal compared to if you were to buy private insurance in the market.
Yes.
Right? That said, your employer is contributing a significant chunk of the premium.
Yes.
In the US. Okay, which is why people don't want to opt out of the entire employment stranglehold, because health costs are extremely high. If you look at the US, for example, the per capita income in the US is close to $80,000 today, right? Yes. From whatever studies that I've done. And the average cost of insurance for an individual or for his family is about $20,000. So you're talking about 25% of your annual income is what you set aside to buy health insurance cover, because the cost of healthcare in the US is prohibitively high. India is a slightly different story. India, we don't have this closed loop systems or these managed care systems that we have, right? While in the US, my understanding is that 97% is managed care and 3% is indemnity insurance. In India, almost 100% of everything is indemnity insurance, which means it gives the insured the illusion of choice that I can go to any provider and, get my costs reimbursed or taken care of by the insurance company. So it's a very different construct here. There's good news and bad news. The good news is that the cost of healthcare in India is way, way, way lower than what it is in the US. Okay. That said, the other thing is that the premiums that an individual pays today as a percentage of his annual salary, if you were to look at maybe a professional in, say, the city of Bangalore who makes about, say, 25 lakhs a year or 30 lakhs a year, I don't think he's going to buy insurance beyond 30,000 rupees a year. He probably spends 1% of his CTC or maybe 2% at best. If he's suddenly gotten a little more aware and anxious and worried, then he'll spend 2%.
And that's what his employer is spending, right? He's not spending directly. That is what his employer is spending. That's what Infosys...
No. This is what if he were to go and buy private insurance. This is what he'll end up spending. Take a typical profile of somebody who's 30, 35 years old. Okay. Maybe he's just got married. Maybe he's got one kid today. He wants to pick up insurance in the market. He'll probably buy a 10 lakh cover for himself, and for his spouse and kid. I don't think he'll end up spending more than 50,000, 60,000 rupees a year maximum. Even if he were to buy separate limits for each one of the members of the family today. So that is 2%. Let's look at that number. The same thing in the US is 25% or 20%.
But this is when it's individual insurance. But what happens if it's a group?
It comes down drastically. If he's part of a large organization, the pricing that his employer would pay the insurance company, it would be if he's buying insurance only for the individual year. Here we spoke about a situation where he's buying for himself, his spouse, and his kid.
His kids.
Yeah. So assuming 20,000 is the cost that he would pay for retail insurance, or the street price, his employer would negotiate a price of 10,000 to 12,000 rupees for it.
Oh, wow.
So the pricing for group employee insurance in this country is not scientific. It is not actually based. It is not risk pricing. It is effectively a working capital product.
It's like gain the market share.
It is that, listen, all things being the same number of employees this year versus last year. Last year's claim becomes this year's premium. That's it. There is no science number. Okay.
And is that because we don't have historical data on group insurance? We've got individual insurance, what the claims might
No, it's got nothing to do with the data. There is data because every time you pay out on a claim, that individual life, whether it's part of a group or not, is still a valid data point for you to price at risk. Right?
Right.
Therefore, what happens is that companies have been able to squeeze insurers so much today, and insurers don't have a choice in some situations because they provide a bouquet of products to the employer. So they don't want to be left out by not having to provide this alone as a piece. There's a historical context to it as well. I don't know if you have time to get into that, but I'll keep it short. Privatization happened in 2000, right? All the private sector companies were given licenses. That is number one. Two, till about 2006 or 2007, we had price controls on many products in general insurance space, right? So we had something called the Tariff Advisory Council. And we would keep it out of what we call the blue book in those days, which means the property prices, property insurance, marine, motor, everything used to be price controlled. So if I'm a new entrant, and if I have to go and pick up the business from an existing organization, which has got world-class asset management practices, right? They do risk management at a great level. He doesn't get the benefit of better pricing for his property insurance, for example. He still has to.
So if actually, because of price control, he cannot offer even lower prices.
You could not at that point in time, till 2007. So what therefore used to happen was, there was a group health portfolio that's available. So that would get bundled along with the one that was price controlled. So effectively, the subsidy on the property that you wanted to give would be reflected in the group health pricing.
Wow. Okay. So here is a lesson. So here is a lesson for entrepreneurs and one of our audience for a channel which is almost 2,600 subscribers now. And most of our subscribers are IAS officers, IIM professors. We have a very, because it's an intense channel. We talk about topics that nobody else is talking about. So one of the advice for all the IAS officers who are subscribers to our channel, please don't have price controls, because when you have price controls, entrepreneurs come and then they have to play games like this where you are bundling and cross-subsidizing with other products. Like Shiva just explained, they were giving them discount on the property insurance by bundling group health insurance.
Effectively. So it's a perverse incentive structure, right? So then companies would buy both as a bouquet. They would not buy anything as a silo or a standalone product and evaluate it on its own merits. So that set the tone for group health to be underpriced to begin with. It has never recovered.
Shiva, I've got this question. Now, typically, I don't know what the technical term in the insurance industry is, but there is, in the fund management industry, we call it portfolio theory. The risk of a portfolio is going to be less than the risk of an individual stock or an asset. So there will always be a lower group insurance premium than if everyone went individually to the same insurance. Now, you mentioned it's about 30% in India. Is that correct? That 15,000 versus a 50,000 for the same insurance cover, roughly. Is that the 70% discount?
No. For the group health insurance, no. Group health will operate at about 35% to 40% discount to the retail health insurance space.
To the retail. So 35% discount. Yes. Yeah.
35, 40%.
I mean, there will always be a discount on group health for various reasons,
100%.
not just bargaining power, but also portfolio theory because of the actuarial risk also, because you're buying a whole portfolio.
No, it is not because of that. Because when you have data points which are individuals, you price the individual product also based on the assumption that you've got enough data points or you'll have enough customers for that cohort.
Yes.
Okay, so it's not likely to be any different. Sure enough, when you have homogeneous profiles working for a certain company and you're able to, understand that they are possibly lesser risk than other cohorts which are not based on the type of profession, but it's more age-based cohorts, sure, there'll be a slight difference. Okay, but that advantage is nullified by the kind of extra covers that you throw in group insurance today, which a typical person who's buying retail health insurance will not get. For example, there's something called pre-existing diseases, right? Which if you have to buy a retail health insurance cover, there is a waiting period for it. You have to wait from anywhere between, now the regulation has changed. They are saying that, insurance companies can even offer day zero waiting period, which means you can buy it back at an extra price if I'm the consumer. Okay. So that is offered free of cost effectively in a group construct. Okay. Typically in companies which are service companies, you have what is called maternity benefits which are covered, no questions asked, right? If you buy a retail health insurance and you have to say, listen, there's a waiting period of 9 months because you don't want somebody who knows that they're going to, if there is a woman consumer or customer, knowing that she's going to deliver the next 2 months, go and pick up insurance and therefore get the insurance to pay for the pregnancy. Now, there are a lot of restrictions that are there in the retail health insurance product, though it is priced much higher. Lesser in terms of coverage, higher in terms of price. Okay? Because retail health insurance works on the concept of true risk pricing plus your cost of overrides, and the margins that you want on the product.
Yes.
But in group health insurance today, where there'll be a lot of people who push back and say, no, it's getting profitable and all that. None of the companies today will actually come and give you the exact P&L for the group construct or the group portfolio today. Right? They will still talk about how group is running at 90% or 95% claims ratio. Claims is not the only cost that you incur, right? You've got costs of managing the operations, cost of acquiring the customers, all of that. So in the insurance parlance, what we call as combined ratio, which is basically your claims plus your commission ratio plus your OPEX cost, right? That should ideally in a developed market setting is normally at 100. Right? Which means you're pricing it correctly. You're clearing the market at this price. And what you make money off is the investment income that you have because you get float. I pick up the premium on day one for the year and then I pay out across, different points in time. And that float builds up and the float gives you an yield or that asset pool that you manage. And most valuations of insurance companies are done on that basis of how big that investment book is and what the yield is. Okay. Assuming that investment book is going to grow at a certain rate. But in India, you find health insurance, the combined ratio is anywhere between 120 to 150 for a new entrant with no sight of bringing this down in a structured manner. That said, it's nothing to do with the companies per se, right? I think everybody's trying hard. Everybody is putting their best foot forward. But I think we need to take a step back and look at the problem from first principles and then say, listen, what do we do about new products? What do we do to ensure that, we create a consumer pool for this category? What do we do to ensure that distribution costs come down? The distribution costs are completely out of whack in this industry. Okay. In the group, the distribution costs are not too high. And there's a perverse incentive as to why companies do group because there is a regulator with all good intent, has said that, listen, your cost of managing your business or what is called expense of management should not exceed 35% for a health insurance company. So the only way you will keep that overall 35% number in line in your business cost structure configuration is to ensure you do more and more of group. Right? Because a group, what you pay out is 7%, 7.5% as commission. What you pay out in retail can vary anywhere between 15% to 60%. So if you're using, again, it's a bargaining power, that comes into the picture. If I am an insurance company, I'm dealing with a bank. The bank will not distribute my product unless I gave him anything upwards of 40%.
Right. So then doesn't this equalize? Doesn't this equalize? Because you're giving a huge discount. The insurance companies are giving a huge discount to the corporates. But otherwise, for retail customers, they would have been pricing it higher, but then a lot of that would lead to the introducer or the intermediary.
No. Today, what's happening? The insurance companies, they're crying foul. They don't make money. People who make money in this business are the intermediaries.
Right.
Okay. So what's happening?
So Shiva is teaching us. Shiva, I just want to distill some of some of the wisdom that you're sharing with us. So one of
you're using big words, man. I'm little.
No, I'm using big words because I don't know who else. No, listen. I don't know who else in India can explain the insurance sector the way you are doing it. And again, I have read up on the health insurance sector in India, and a lot of this that you're telling me, I couldn't figure out from what I read up, the YouTube videos that I watched. So I'm using big words because you deserve those big words, because that is the knowledge you're bringing. So two things that I'm taking back. One, for all small businesses in India, buy group insurance for employees, because Shiva here, an expert in the health insurance sector, is telling us that if your employees have to go and buy the insurance on their own, they'll be paying more. And the second thing that Shiva is telling us is that when you buy group insurance for your employees, you'll pay less, but you'll get the same services. But when these employees go out and they buy their own private individual health insurance, they'll pay more, but the money doesn't go to the insurance company so they can get better care. The money actually goes to the marketing channel.
No,
that's one thing.
Shipping costs are very high, distribution costs are high, but I have one small correction to make here. I would strongly advise companies not to buy group insurance. I'm saying if you want the system to become better today, please understand that the correct price for the product is somewhere between the correct pricing, the pricing for group insurance and the pricing for retail health insurance. That is a true price for the product. Okay. And the more that, the earlier an employee is told, my view personally is that every life is unique. Okay. And therefore it should not be part of a group, because what can happen to you is not likely to happen to somebody. So in a group, what happens is that a healthy individual is paying for somebody, his co-worker who is not healthy that year. The healthy individual is not getting the benefit of his good health across time. Okay. Every year the pricing is reset. Okay. And that is not good news for him. But if he's going to build a track record for himself, if he says, hey, listen, you know what? I want to have the ability of buying my own individual insurance. And if the employer can facilitate that in the same cost structure of distribution, will that not be fantastic? Today, my employer is willing to pay me. So let's take this hypothetical example of somebody who's paying, say, 10,000 rupees or 12,000 rupees as the group insurance premium. Today, the employer is paying all the 12,000 rupees on his behalf. If you were to go to the market and pick up something which is more or less the same coverage, right, in the retail market, he'll pay 20,000 rupees. Would it not be so much better if there's a product that lands at, say, 15,000 or 16,000 rupees, which gives him the ability to control his destiny? And what I mean by this is, would it not be great if he says, hey, listen, the employer is going to pay 12,000, I'll pay 4,000 from my own pocket. Take control of this insurance. It will travel with me wherever I go. The one line USP is that this moves with me like my PF account moves with me.
Yeah,
today, what happens is that if I quit my employer, then I lose all the benefits. I start all over again. If I quit my employer to then start a new venture of my own, I enter the retail insurance, I port that category at a much later point in time, and it is completely age dependent what the pricing is going to be. It does not take into account the fact that, I had good health behavior in the past. Because if I buy a retail insurance product, I keep getting indemnity bonuses. I can technically, in about 4 years' time, across most companies, as though it's not standard, double my indemnity limit. If I'm buying 5 lakhs today, 4 claim-free years will make it 10 lakhs. Okay, and therefore I built this wall of protection, which is completely mine. If I were to stay in the company and spend those 4 years, my limit will not go up beyond 5 lakhs, because at every point in time, they're squeezing the insurer on pricing. The company is not willing to pay him, give me more indemnity or give me more coverage, because he has a budget. He has a boundary condition which he has to adhere to, right? So my view is that, listen, if you're an SME, if you're new to insurance, as a benevolent employer, please tell the employee, listen, this is my budget for you. You go and buy your individual insurance. If required, let me negotiate this for you. Okay.
Shiva, one quick question I'm quite curious about because I'm not up to date on the Indian taxation. What does the company pay when they provide this as a benefit to the employee versus if the employee was to take? How does the tax rates differ? Is there like a perquisite tax on this or not?
No. So whatever the employer pays today is expensed out in the employer's P&L directly. There is no
so the
perquisite
employee
tax.
is not paying tax. So, but if the employee got, like you're saying, if they got the 12,000 or the 16,000, they would pay tax at whatever 35 odd percent.
No. So here what happens is that you have a co-pay product where the employer pays the 12,000. Okay. That goes out from his pocket. What the employee is paying only 4,000 rupees from his pocket. For the 4,000, he can claim the 80D exemption that's available today
Okay.
for medical insurance. This 4,000 is just for a notional number. Up to 25,000 rupees of premium payment, he gets the tax exemption, right? There is no confusion. The employer can get the benefit for the 12,000 that he has. The employee can get the 4,000, 80D premium exemption. No problem, right?
Okay. So you're saying that on the tax, from a tax question, this is not hurtful for the employee.
It is not in any more inefficient than what the current taxation structure is, number one.
Okay.
You have workarounds to ensure that, these two payments are segregated while it is going towards the same policy payment. There is no problem. You can ensure that. There's no problem.
So Shiva just explained to us something so important that my brain could not catch it in the first revision, and it required him to intervene. Because what I was recommending to everyone was that all the small businesses in India should go out and buy health insurance for their employees because it's going to be cheaper. But what Shiva is saying is that from the employee's perspective, it's better to have individual insurance because, say, you're working for Infosys. If you have your individual insurance and after 3 years, you decide to go out and become an entrepreneur, you now don't have to worry about your health insurance.
Exactly.
But if you were insured by Infosys, and then you decide to go out and become an entrepreneur, now you have one more thing to worry about your health insurance. The second reason that Shiva gave us of why you should be getting your private health insurance is this idea that, say, you are spending 15,000 rupees each year on your private health insurance. And if you don't use the product for 4 years, then the health insurance companies will take your limit from 5 lakh annual spend on your health to 10 lakhs. So those kind of benefits, if Infosys is buying insurance for you, you don't get those benefits, right?
Exactly.
So those are the two reasons why Shiva is saying that though for people, it will cost them around 20% more. I heard the number that, again, approximate numbers that Infosys is spending 12,000 rupees for insuring me. Personally, I'll have to spend around 15,000. So around 15-20% more I have to spend. But there are two advantages for this 15-20% extra spend. Advantage one, when I become an entrepreneur, when my life journey changes, say I move to a different city or I get married and I have to move away, those benefits stay with me. If I'm a healthy individual, I'm taking care of my health, the amount that I'll get back in a year increases. Those are the two advantages.
Absolutely.
But I want to, so thank you for making this problem more clearer to me or more rich, the dimensions more rich. But I want to ask you this, okay? One of the problems that I face is that I get overwhelmed. As an individual, I need to take care of less things because there's so much I need to take care of. And hence, because, I studied BCom at Shriram College of Commerce before I went to IIM Bangalore, and I remember 80D exemption. But once you mention 80D, I start sweating. Oh my God, 80D, income tax, pata nahi kya hai yaar. So how do you value? So you told us that by paying 15% more, we get these two benefits. But there's a disadvantage. On the disadvantage column is that I have to take care of one more thing in my life. So,
which is why I think you need innovation in this category. The current way this is delivered will obviously create more confusion, right? You need to have innovation wherein you say that, hey, listen, it is anyway through the employer. Employer will get the feed of the HED payment that you have made. It will go into his tax working automatically. All these things can be automated. Yeah, these things can be pulled. And the employer will know exactly whether, when he's contributed this 12,000, whether you have actually closed the loop and paid the 4,000 and picked up the insurance or not. He gets the report in any case, right? So I don't think it is any more complex than what it was. I'm not saying that our tax rules are simple, okay? We've got an old regime and a new regime, and there is a lot of things that are up in the air. People really don't know which way to go, which I understand. That said, I think it is no less, or it is not any more onerous in terms of tax from what it was earlier.
Okay.
That's my limited.
Okay, so Shiva, let me ask you this. So you explained to us a little bit of history of the health insurance sector. It got privatized in 2000, 2001 regime. Till 2007, we had price controls. People were playing all kinds of games. And then this hangover of low-cost products has stayed in the industry. You also shared with us that around 20 crore people in India today have group health insurance, with around 60% government entities, 40% private entities.
Not in the private sector, yeah. I would say
in the private sector.
Yeah, that's my sector.
Yeah. My latest estimate of Indian population is around 140 crores. Correct me if I'm wrong.
Correct.
So out of 140 crores, how many people have insurance today? Like, is 50% of India...
What insurance companies cover? I think it will be about 24 crores, 25 crores.
So is the rest of the India uninsured or
no,
because I keep hearing...
Yeah, about 40, 45 crores have got access to the IIM Bharat scheme, which is a PMJ scheme, right? There are a bunch of people who've got access to what is called the CGHS. If you're an ex-central government employee, you've got a central government health scheme. For the blue-collar workers, you have something called the ESIC, Employment State Insurance, whatever, corporation or whatever, right? Then you've got ex-servicemen, there is one scheme that's available. So there are a multitude of schemes. So the government spends on all of this, right? You've got CGHS hospitals, which are run by the government. You've got ESIC as an entire institution run by the government, funded by the government. So again, going one step macro, the outlay for health in this year's budget is close to 90,000 crores. Okay.
Wow. What percentage of GDP is that?
Well, what percentage of that? My sense is, see, I've not been able to reconcile these numbers, to be honest, right? I look at the various sources of data. There'll be a statement where they say that, listen, the goal is to take it to 2.5% of GDP by 24, 25 or 25, 26. But if I look at the 90,000 crore number, it doesn't add up. Okay. All I can say is that the total healthcare spend in the country is between 7 lakh to 8 lakh crores annually. Okay. So if I use
the number I've usually come across is, and it's just a headline number, is about 2.5% is spent on
GDP. Correct. 2.5% is not what the government spends. It's a 2.5% is the total spend on healthcare in the country. So if you look at our country, right, we're about $4 trillion. Okay.
Yes.
$4 trillion in rupee terms will be what? It will be about 320 lakh thousand crores or whatever. So 2.5% of that will be about 7.5 lakh crores. Thereabouts. Okay. 7.5 lakh to 8 lakh crores. I think that's the kind of calculation that I've done in my head. Right? And of this, government is spending 10%. That's my sense. Okay? 10 to 12%. Insurance is at about 1,20,000 crores. So insurance is about maybe, whatever, if you take 8 as the base, then we are at about, 15%. So between 15 and 10. So the rest is all self-funded. So in fact, out of pocket in our country, while they say it's coming down and all that, it's still substantial. Directionally, it's still very, very high. About 45 to 50% of all healthcare expenditure is out-of-pocket expenditure, which means it is coming out of people's own savings or borrowings for which they did not take any prior protection earlier. Right?
But Shiva, why is that? Because if we have IIM Bharat scheme by the government, say if a person who is 40 years old in India, in Bangalore, gets sick, and say he's an auto rickshaw driver, why can't he just use Ayushman Bharat?
Okay, but look at the numbers, no? Ayushman Bharat today, the annual spend from the government side is about 8,000 crores. That's it. So what they have done, which I think is a good beginning, but it's still not very mature, is that they have devised a number of packages. And Ayushman Bharat is only for hospitalization. And again, this is very important. Probably I should have said this upfront. Most insurance in our country is only for hospitalization. It is not for what in the insurance parlance it's called IPD and OPD, inpatient department and outpatient department. It is all for IPD purposes. Okay. So, but bulk of the expense happens for OPD, for consultation,
Absolutely.
for medicines, for diagnostics, right? So that is where the insurance companies really don't come to the party at all there. Unlike the US, if you're a part of managed care, everything is taken care of, right?
Yes.
So,
I got viral fever 2 weeks ago. I walked into Stanford outpatient clinic, and they took care of everything. And then they said, go to Walgreens, pick up your medication. I went to Walgreens, picked up my medication. Not even $1 was spent anywhere.
Exactly. And we're talking about, even then, you're saying that the US has got challenges in terms of the national healthcare system, right? But the US is a rich country. My worry is that this Ayushman Bharat is going to increase. Government is going to be broke in some time. And we would not be a rich country like the US. So my worry is that we are not going to be in great shape. 2040, I think the demographic dividend we're talking about in this country is going to shift. The number of older people in the workforce is going to be more than the number of younger people. So we have got 15 years to fix this problem, according to me. It is too vast and humongous a problem for us to solve. But I think we need to start making the right interventions across the entire supply side.
So Shiva, let me, you might not know this, but actually ran a healthcare company in the US from 2013 to 2022. Okay. So I have a very deep understanding of the US healthcare industry. In India, when, say, a person works for a larger company like Infosys, when he gets group health insurance, it's only for when he's hospitalized. He's not getting group health insurance if eye exam karwana hai, diabetes hai to dawai leni hai, blood test karwana hai, is my diabetes managed or not? None of that. All of that is out of pocket.
Out of pocket, yeah.
Oh my God.
So that's a fundamental difference.
And Shiva, is that not even covered in the Ayushman Bharat? Or
no, Ayushman Bharat is only for hospitalization. They really can't, afford to have this. See, so the problem is the supply side is so fragmented, right? If you look at the US, you've got some of these, maybe I don't know how many provider networks are there, but I think you're not too many in number. You have to be part of a provider network. Then everything there, the data flows regarding the patient, then, everything is captured. It's a closed loop system. There's no problem, right? Here, it is the supply side is so fragmented. The cost of treatment varies from geography to geography, right? Now, how do you then standardize the protocols to begin with?
Okay, so
now, there is a very interesting thing that's happening in this country, which is called the National NDHM, I think, National Digital Health Mission, wherein there is a serious effort to ensure that there is this right kind of plumbing, which is done for all the providers, big or small. Right? So there is this great guy. I've never met him. I'm a great fan of what he's attempting to do. There's a person called Rizwan Koita in Bombay. He runs a company called, I think, CTS Tech, which is a healthcare firm. Apparently made a lot of money servicing the US market, the provider market. I think Bain Capital has picked up a stake. Apparently it's a unicorn now. He's made his millions, but he's also decided to take a step back and create what is called the Rizwan Koita Foundation. He is now the chairperson of this NABH, National Accreditation Board for Health, which means that will be the quality certification authority for all the hospitals in the country, right? And from his own foundation, he is now trying to build a platform by which all the hospitals can use that as the hospital information system, but therefore it will standardize patient health records, ensure all the records move seamlessly across different ecosystem providers, whether it be the doctor or the clinician or the hospital or the pharmacy or whatever, right? The diagnostic chain, whatever. He's trying to do that. Obviously, it requires a lot of standardization, all right? And for them to port this, I think there's some subsidy that the government is willing to give as well. So it's a very ambitious project, but a very noble one. So once he does that, then it doesn't matter. I just need to, the government is also coming with what is called an ABA account, which is the Ayushman Bharat Health account that everybody should have now. If you buy insurance, you must have an ABA account, or automatically an ABA account is generated, right? The objective of that is that while there are two sides to this coin, there's one set of people who said, listen, the government wants to know everything that I'm doing. It's a surveillance economy that we have, all of that. But I think somebody who's poor doesn't care about surveillance. He wants benefits, according to me, right? Whether it be DBT or whatever, right? So they are happily willing to create this account, and that account will be like your UHID, right? So
Universal Healthcare ID.
Huh?
UHID, Universal Healthcare ID.
Universal Health Identification number. So once you have that, whichever clinician you go to, whichever hospital you go to, they'll be able to pull out your records, right? The biggest challenge in healthcare is what? Information asymmetry, right?
Yes.
The doctor who's treating me doesn't know completely about all that I've done in the past. He doesn't have access to it. At that point in time, there is a dialogue that happens where I tell him a few things. He needs to pull out my entire medical history and then start looking at it, right? And then,
so Shiva, thank you so much for bringing so much knowledge. This whole idea of information asymmetry. We are running out of time. We only have an hour left. But Shiva, thank you for bringing out this idea of information asymmetry. We'll have to talk a couple of minutes about that because a lot of people are watching. They don't understand that. But also thank you for introducing our channel to Mr. Rizwan. And I would like to make an open offer to Mr. Rizwan to come to this channel. We have 2,600 subscribers today. Most of them are people who graduated from IIMs, IAS officers, and so on. So what we talk on this channel actually influences what happens in India. So and it's so good to see someone so experienced like you actually tipping your hat to Mr. Rizwan, who seems to be doing things out of passion and out of love for our country.
Right, when somebody does something, I think what we need more of is public spiritedness. I think we've got exceptional talent. We've got extremely great skill sets. But I think somewhere people should know that they need to make an impact. Or I don't like to use these fancy words, which I think is all over the social media today. Everybody talks about purpose and all that. It's not about purpose. It's about saying that, hey, listen, are we doing the right thing to begin with? Or are we trying to, solve the problem with the existing constraints without trying to even attempt to remove the constraints? So then it's about who's smarter in managing the constraints. Somebody who came in earlier will always have the head start over somebody who's coming in new. Therefore, beyond a point of constraints are going to limit your scope of influence or the scope of activity. You will not find new entrants coming into any category beyond a point.
So Shiva, you've presented to us a lot of issues that are there in the healthcare insurance sector in India.
Yeah.
I'm actually sad to hear that it's only hospitalizations that are covered, because in my personal life, 90% of my healthcare spend has been non-hospitalization spend.
Correct. What is stopping us from providing this is, if that's your question, early attempts are being made. Some people are trying to do it, but they're very wary of the fact that there can be rampant fraud in this country. Why? Because it's not digitized. So if I submit a bill for reimbursement, I went to the doctor, this is what he prescribed, these are my bills. Man, everything can be bought for a price. Okay, so there are some startups that have gone down under already, trying to do this OPD game, right? I won't take the name, that's not fair. But started with a lot of fanfare, felt that, I will just build top of the funnel. But then it was a leaky bucket completely, because it was they had no problem till the funding pipe was alive and kicking. Because they could show more additions on top and then justify why there's some attrition happening or why there is some extra cost of, running the business. But soon enough, they even tried coupling this with, an IPD product from a traditional insurer and taking it to market. They tried that as well. But I think it did not work because they did not have a closed loop system. You must be able to track the entire activity of the patient or the customer around this, which they did not.
Absolutely. In fact, Shiva, so I worked in India 25 years ago. And from my recollection, it was standard practice even in top corporates where people used to ask कि boss को end में medical का bill है, एक company ने allowance दिया हुआ है कि कौन से chemist से कौन bill बना कर देगा. It was very standard practice. It wasn't even supposed to be thought as fraud. I'm definitely talking about back in the day, because it was part of your own CTC. The only thing that you were saving is some tax. Because
there was nothing. There was no shame in doing that, because it said that, hey, listen, the government is not doing anything for me. Let me outsmart the government for a change. So just done. Exactly. Accepted practice. Exactly.
Yeah. And I have to tell you, so unlike Viks, I'm not a healthcare entrepreneur, but I've been in the UK for the last 15 years, an investor in healthcare. And I track this the reason I don't know healthcare insurance enough is because in the UK, we have the NHS, which also doubles up as an insurer effectively. So we don't do, but when I read about the National Digital Health Mission and the unified, the UHI thing, I was so amazed because that has been going on for about 5 or 6 years, at least, if I remember, maybe a bit longer. I think it might have been derailed because of COVID and all that. But the hope that I had is I've been looking at NHS. So in fact, I'm part of the NHS Accelerator where we look at companies which can provide digital.
I just want to point out, Miglani is actually a fellow of Royal Health Society in Society of Medicine in UK. So he's a pretty big guy. He doesn't like to talk about it. Which is actually
what? We spoke about information asymmetry. I think it's playing out here. I didn't even know that he was this big. I didn't even know what his interest in healthcare.
So in the NHS Accelerator,
you ran a healthcare company in the US.
Yes, 9 years.
See, the thing is, I have to tell you that as an investor, you basically dipped your fingers in so many sectors effectively over the years that you're like kind of a jack of a lot of sectors. So, but healthcare is one of my more of a specialist sector than just being a jack of that sector. But I was trying to relate to NHS digitization. I've seen it for more than a decade. कुछ नहीं हो रहा. I'll say it publicly. मैं क्योंकि यहाँ पर जो top senior NHS लोगों से भी मैं मिलता हूँ, they all give speeches and then speech के बाद cocktail पे मिलते हैं. तो I was like, is that happening? It's like, yeah, hopefully before I retire. ये वाली बातें होती हैं. किसी को नहीं पता है कि आगे बस चले जा रहा है. But and the reason I was optimistic when I saw that UHI and all that is because I immediately thought about the chemist bills that we used to do 25 years ago. And you're absolutely right. India में rampant fraud होने का सबसे ज़्यादा chance है. And also because of the volume.
So Shiva,
India is like 22 times the UK population.
Let me give you. In fact, I was talking to somebody yesterday. Can't take the name again, but you need to have this. You have this requirement to do a KYC right now. In fact, people don't mind even if somebody is dead, propping up that dead body vertically and taking a picture and saying, "Hey, aadmi hai, KYC karo." So that, then I can create a dummy account and then I can start doing a few things, right? So there is everything that's possible.
So Shiva, now we're going to move in the second hour that we have. We finished our first hour. And as we move to the second hour, what I want to figure out from you is, Subbu, the Chief Economic Advisor of India, current IMF director, he says the Indian economy grows from 4 trillion to 55 trillion in the next 30, 40 years. You're saying that, look, the economy has so many problems, right? The health insurance sector has so many problems. Now, obviously, whenever there's a problem, there's opportunity, right? And whenever there's a problem, there's an opportunity. And when Subbu came to the episode, he was talking about how it would be the entrepreneurs who have to solve the problems. And it would be, he says that now the framework that the Prime Minister office has is, let's create billionaires in India. Let's have thousand billionaires in India. Like, let's not say ki Amir Admi kharab hai. Let's say Amir Admi are the problem solvers. So we want to spend the next 1 hour saying ki for all the IIM graduates, for all the MBA graduates, for all the guys who've have not done IIMs but have gone to Sriram College, Chartered Accountancy करी है, उनको भी भूल जाओ. Think about all the जो चाय वाला है, वो भी तो entrepreneur. बहुत मैंने I've met some very intelligent चाय वाlas. मैं कहता हूँ कि अगर they could have taken my seat at IIM Bangalore with just a slight difference in the trajectory of life. So we have so much entrepreneurial talent in India. Now, अब मैं आपसे जानना चाहूँगा, and I want to push on this. So what I want to understand from you is, what are the set of ideas or idea space? The idea about what's that idea space that will create 1,000 entrepreneurs in India who will all become crorepati's by solving the healthcare problems? What is some of the space that people should be exploring today?
Oh, in the healthcare space specifically?
Yes, in the healthcare insurance space.
In the health insurance space, I'll tell you there are constraints because it's regulated, right? Because the regulator has got the best of intent, but I think he's also very worried that if a new person is licensed, then he needs to have the correct financial backing for it. I think we don't have that kind of capital backing ideas in the health insurance space today. What we are seeing is the tip of the iceberg where people who want to do maybe algorithmic claims management, for example, or if somebody is saying, hey, you know what, I can help you solve for digital outreach, or you know what, I can help you probably develop new products for you, which is more advisory. I think those kind of startups are mushrooming. Okay. What is also happening is that healthcare financing is picking up. I can see more and more startups coming in that space. The belief is that, as premiums are going to become larger, it is going to be a significant component of your take-home pay. And like how there has been this mass consumerization of credit that's happened in this country in the last 3-4 years, the entire banking system is only lending to consumers. They're not lending to corporates in this country. I don't know if you've tracked that. Right? And actually, it's
so finally, the Indian culture has changed. We didn't used to believe in credit cards. We didn't used to spend on credit cards, but that has changed. People now carry a credit card.
We're over-leveraged.
Over-leveraged.
Other way. In fact, we don't, the good thing is in India, we don't call things subprime like the US. But we have a lot of subprime crises brewing in different areas, in different geographies, in different sectors and all of that. And what is helping is the fact that, traditionally our savings rate is pretty high, right? We're close to about 28%, 29%. Though it's dipped from, I think it used to be 32, 34%, right? I think obviously people are consuming more, no two ways about it. Two, the good thing is that savings are getting financialized more. People are not putting into hard assets as much. So therefore, there is enough liquidity in the system at any point in time. Much of it is finding its way to the stock markets today. This is why the stock markets are in its own orbit, in its own zone today, devoid from reality on the ground in terms of what's happening. The growth is decent, does not warrant this kind of, a stock market exuberance. Employment continues to be a challenge today in this country. We're not creating enough jobs. There are policy nudges that promote manufacturing in this country. I strongly believe that services will only ensure that urbanization is, more rapid. Right? If you really want to create a broad-based economy which is well distributed in terms of wealth, then you need to have manufacturing which goes to the hinterlands of the country. Right? It is not rocket science. We all know this. For years on end, we have had concessions being given to companies that go into the backward areas. You had a tax concession or whatever. All of that happens. But you need to have chunkier investments coming now. Now, the good news is that geopolitically, we have an advantage. Everybody wants to de-risk China. Therefore, people are coming to India. So some of these things are happening despite poor policy environment, despite poor infrastructure that we're able to provide today. Right? So while all of this happens, I think there are a swing of opportunities as well. I don't want to paint this gloomy picture. India is a land of opportunity. Where else will you find a teeming market like this, which is growing? Right? The rest of the world is struggling with growth. And here we've got the numbers. It's not just the growth rate. Right? And you're finding more and more people moving up the income levels, which means discretionary spending is on the rise, which you did not have before. Which means you need to now have a set of products and services which cater to this requirement at scale, right? Is no longer products and services which you said that, this is for the ultra elite or it's the ultra HNI segments. Now that the aspiring India is also wanting to have the same kind of lifestyle today, right? So I think there is opportunity across all sectors, if you ask me, but the sectors that I think will do extremely well and should, because I think that's critical for us. Anything in education and health, I think are fundamentally, my belief is that these two are access platforms, right? You need to provide this. It's actually enshrined in our constitution as a fundamental right. But, how well it's delivered, it's a different matter altogether. But healthcare, one is, I think the body of knowledge around medicine is vastly changing at a rapid pace, right? It's no longer confined to certain boundaries. There are new things. I think infectious diseases is a new area which people are not even, scratch the surface. We don't know enough. So how will that impact us, right? So we have these problems, but healthcare is a huge area. I think the magnitude of the problem can actually kind of keep you a little sullen, but I think there's so much one can do. It's humongous. It's not a small problem to solve for in this country at scale for 1.4 billion people. It's not a European country, right? So I think
Shiva, which are the top three areas? Let's say I decide to move back to India. I know a bit of healthcare. I don't really know healthcare insurance, but maybe adjacent areas which are related.
if you're not out of capital, go set up a hospital. You'll make money today.
Right. Okay.
Yeah, that's one. Two, if you want to telemedicine, do that. Go to a rural area and set up a center which relies only on technology. I think that's a great space to be in to deliver last mile.
Thank you, Shiva. I think you just made a lot of people successful with this. Set up a telemedicine center in rural India. कि ज़्यादा पैसा नहीं भी है, तो it's not very hard setting up a telemedicine center.
Oh, it's not at all, sir. Not at all hard. There are lots of interesting pilots being done. Yeah. In fact, there's something called 10-bed ICU. This person called Shrikant Nadamuni who's doing it. He was the one who set up something called EGA earlier, along with Nandan. This 10-bed ICU is a fantastic concept. They go to a government hospital and say, listen, give us 10 beds. We'll convert that into ICU beds. And for that, those 10 ICU beds, you will have a technology platform, okay, wherein you don't need the expert to deliver tertiary care there to the patient. You will ensure that, he does all the blood markers and all those tests are done there locally. At the same time, things are sent through a technology platform to a centralized hub where it is read by experts, and then the expert advice is sent back. So in a way, invest in AI. AI for healthcare, I think, is a huge space. I think India will never have enough doctors to take care of all our 1.4 billion people. At no point in time will we have that. That supply side, if you look at physical capacity, it's not going to happen. Can AI help? I think AI can help. Technology can help. Technology can help. Like what my friend keeps saying that, hey, listen, you know what? I think the poor will have AI. The rich will have humans as doctors who will read off AI and then also give you that extra layer of, advice. And for most things, you really don't need to go to a hospital, right? If you're able to do early detection, right, at the primary care stage, you don't send that patient to secondary and tertiary in any case. So the systemic cost of the healthcare will come down automatically. And technology, I think, is just taking off, if you ask me. So I'm very bullish on the fact that, who will win there, I don't know. I'm not an expert. But I think directionally, technology for healthcare is a great space to be in. Earlier, technology in healthcare meant somebody's doing hospital information systems, going and doing some bespoke HIS for a hospital. That's a useless business, right? Because you'll only scale up to this, because every guy will want his custom requirements in terms of functionality. We'll go and build that. And then you will be stuck for bandwidth because you are doing some bug fixes for 60% of your time. It will not let you scale. Today, you can build great products. You can build products which are on the handheld for individuals. In fact, Nachiket Moore, I don't know if you've heard of him, ex-ICSCI. He's one of the... Nachiket Moore used to be DMD at ICICI Bank.
What's a DMD, please?
Or Deputy Managing Director at ICICI Bank.
Okay.
He was reporting to Kamath, right? Back in the day?
Yeah, correct. Yeah. And he was one of the brightest minds in the area of finance and economics in this country. He was a batchmate of Raghuram Rajan, 1987 batch. So when Raghuram Rajan was the governor at RBI, Nachiket was also on the board of governors, right? And advising them. And then he consciously moved away from the world of finance and economics to get into health systems and policy, public policy. And like what he calls himself, he is a student of public policy in the health space. But I think he's got some of the best ideas in the healthcare space today. And he's done so much research. He reads so much. He writes some fantastic white papers. I've not read all of them, but I can tell you, when such people are there, I think we get encouraged. That at least policy direction is good. He sits on, I think he's involved with IRDA. In fact, there is one company which, in the health insurance space, which is attempting to go Bharat first, instead of going to, the urban India, which is Narayana Healthcare. They launched a health insurance product. Very interesting take on the category itself. I hope they succeed, because I think we need not one, we need thousands of them to actually come in this country. You look at the US, you've got about 950 odd insurance companies. Okay. That's how fragmented it is. In India, we have all of 32 or 33 today. And our population is much larger. So there,
Wow. So Shiva, you gave us, you gave our
I think
venture
I just
capitalist.
I gave you one broad brush, no specific points, I guess.
No, then that's how it has to be. It has to be the idea space. And you gave our venture capitalist on our podcast two big areas. One, set up these remote health platforms in rural India.
Telemedicine.
Another telemedicine. Another this whole hospitals in India because there's not enough supply of healthcare services. Third, this whole idea about technology, whole idea about put the power in the hands of the consumer, give him an app with which he can ask questions and he can solve a lot of his problems.
Something which is the equivalent of an OYO for hospitals, yeah.
Okay. Tell us more about OYO for hospitals. That sounds interesting to me.
Yeah, yes. I don't know if I should go to this hospital X or Y. I need somebody who curates this and tells me that hey, this is a standard. They are up to a certain standard, right? They're value providers for me. I don't need to go.
What's the pricing? Like, can I today find the pricing of MRI at different hospitals in India? कि अगर मैं Calcutta में रहता हूँ, Calcutta में there are 20 hospitals within 10-minute driving distance of me. I would like to know what is the pricing of MRI in each.
Right. I need to know. I need to not just, is there a difference in price? Is there a difference in quality? Is it been validated by somebody like a third party across certain standards that we have? And therefore, what the consumer reviews are, right? If all of these things are encouraging, I'll walk into something that I'm not familiar with.
So,
I mean, as a health consumer in India, I also want to know one more thing. कि अगर मैं MRI कराने जाऊंगा तो कहीं मेरे को 25,000 other tests तो नहीं करवा देंगे वो.
No, that's the principal agent problem that we have between the patient and the doctor. Right? As a customer or a patient, you assume the doctor will do whatever is in your best interest. The doctor wants to do everything in your best interest, but he also wants to do what is in his best interest. His best interest today are the incentive systems which makes him refer patients to another network of doctors that he has. It's like a quid pro quo. Right? Yeah. Unfortunately, it is not seen as an unethical thing to do. In fact, to the contrary, they all have been given targets in hospitals. Say that, listen, what is your billing per patient? So everybody has to work towards the billing. So
their compensation bonuses are linked to how their billing volume for the year.
Right, yeah. So which is why hospitals also say, listen, if you're a specialist, you can come and consult in my hospital. I'll give you the space because I will just take a percentage on top of what you're doing. And therefore, if you bill more, good for you. Right? We have got the entire delivery system because the fundamental equation of trust is between the patient and the doctor. I blindly go by what my doctor says, right? I will not question it. While today Google has come and all that and doctors get annoyed, I still will go because I need to know, I need to be in good hands. End of the day, Google will not take care of that for me. And therefore, the referral pathways there are no standard protocols. How do you bring protocols to the system? Right? And like what somebody said, hey, listen, make the data flow across the entire system, number one. Two, have standards saying that, hey, listen, this is within range, this is not within range. Three, like for example, how is a claim, adjudicated in the US? Everything has got a code number, every entry, right?
CPT code. We call it CPT code, yeah.
Then you look at the description, then you look at the value. There could be some things which are non-standard, but you check whether it's within the certain range or not. Then you say good to go, not good to go, right? Fundamentally. Today, we don't have those protocols. One is the protocol, is what should be the kind of testing.
So we don't have CPT codes in India for services provided?
No. We're all non-standard.
Oh my God. So I am telling everyone, the ideas that are being discussed in this podcast will create billionaires. And we're going to check back in 2050 when all three of us are old men. And we'll say that the ideas that Shiva gave us in this podcast, how many billionaires in India, or how many crorepati's in India these ideas created.
It is not
so
I am definitely picking up some of these ideas, Shiva. I will discuss them with you. And both as an investor, maybe as a future entrepreneur in India, because I'm very optimistic about overall healthcare in India and the private opportunities that are there, partly because of the volume of patients or possible patients, but also because of the direction, both from the Ayushman coverage that the government is doing and therefore which will need private providers, but also from the data, the the data health initiative and there are a few, but we'll take those offline. Shiva,
No, sure.
last thing about this case study, the last thing about future. What is your vision, but not like 2050? 5 years from now, 2029. By the time 2029 elections come, what do you think healthcare in India will look like?
That's an interesting question. In fact, I was about to say, listen, I don't believe the 2047 vision, to be honest.
Yeah. 5 साल के आगे तो मैं I can't even see 2 years by the way, but ठीक है.
No, I think policy enthusiasts have to talk about it. Because in my view, I think it's a cop-out of some kind, where you say you defer accountability to the future, and therefore, you show this shiny new object, which obviously nobody can evaluate what you're doing, right? So if you're sticking your neck out, talk about the next 5 years. Next 5 years will be double, is the question, right? From where we are today. We're a 4 trillion economy. We will not double, right? Because we grow at 6% or 7%. There's nothing wrong with 7% growth. I think we should first reconcile to the fact that nothing wrong with 7% growth. When policy prescription maybe release another 100 basis, sure it will release. Okay? It'll automatically, I think the power of compounding will kick in after some time, right? Because when we hit a certain threshold size, things begin to happen. In fact, I was reading somewhere that, while we are per capita, we're very low, we're $2,500 per capita in terms of income. In terms of purchasing power parity, we are probably number 3 or number 4, right? Yeah. Because our cost structures are also very different. So we need policy prescriptions for the country that we are, which are basically based on first principles thinking. I think too much of this Western influence in terms of policy making does not work in India as well. I think Western influence is very important because I think they have done some things in the past. They have got a very empirical approach to things, which is important to understand. Scientific rigor is there. And capital also comes from there. So we've got to respect that. At the same time, I think we need to have our own approaches to problem solving in this country, which I think will happen. Next 5 years, I think entrepreneurship is on a roll here. I think capital inflows in this country are higher. There is no stigma to failing anymore in this country. And you can keep moving on. And the perceived difference between being in a job vis-a-vis trying your own stuff, right? The opportunity cost, which was very high earlier on, is no longer there, right? Because you've got enough stories of people making it big here. So there is this desire for people to jump into the space. And the good news is that no corporate prepares you to get into a startup in any case, right? Those skill sets are very different. These skill sets are very different, right? And I think this generation of the people now coming in have no confusion in their head. Nobody wants to join a large company. I can tell you that. Right? People want to be, hey, listen, let me roll my sleeves, dirty my hands and do something. I think a very small percentage of people actually want to go and work for large companies now. Right? I think that's the challenge that large companies are facing in terms of talent acquisition.
I mean, in fact, I see that, and maybe I might disagree slightly on where that directionality is going. I do believe that young people should work. I don't know whether it should be for 5 years or 2 years, but they need to work in a company, established company in the sector, and learn the ropes. Why learn it on your own time? Why learn it? At least learn the sector. And then, because in a large company, you will see all the small opportunities that the large company, which is not nimble usually, is not able to take. And then you say you come out and abhi apna startup karo. Rather than कॉलेज से निकल के करते हैं कि यार मेरे को सब कुछ पता है इस सेक्टर का चलो कर लेते हैं. I think that is a bit of an overkill in my opinion.
I agree with you. I'm not for a minute recommending that as their ideal career path as well. But I'm saying
but you're also right that people are doing that. A lot of people are doing that.
I'm only saying that what I'm observing, while I completely agree that, go work in a large company for 2 years, 3 years, till such point wherein you don't become complacent and lazy in the head. Okay? Yes. But there is so much to learn from a large company in terms of how organization functions, how you get along with people, how do you get things done, how do you get things done through people, right? Understand that you need to be patient because impatience I think, is a big challenge, right? You need to know that certain things take time and for good reason. So get that also into your system, appreciate that. In the process, like what you say, it will sense some opportunity, then think about it. By then you're wired to evaluating things very in a calibrated manner, objectively, without, a rush of blood. That is what a large company hopefully should teach you. Because large companies are not nimble. They take time over things, right? They go through multiple iterations. So some of those things, if you get internalized in your head, then you'll know that you got to do those, run those checks in your system, in your head, before you then take the plunge. And that is the rigor that we're talking about. So nothing is done without a process, right? What you don't see in startups is that there is no validation of anything. It is just that I want to change the world. I am a great guy. I feel very good about myself. I have got age on my side. That is my mantra. And therefore, please give me capital. I will work on this problem and solve it with no understanding of the domain. Just because you think that you can code a few pages and you have tech on your side, people plunge into it. I think a little bit of blind belief in your abilities is also required, because you also can't have this other extreme of saying, I will look at everything 360-degree view, wait, watch, evaluate, because then it's analysis paralysis. You also need some, I would say the irrationality of youth is important, right? When you plunge
the foolish optimism. The foolish optimism. You need a bit of that.
Yeah, you need a little bit of that. To not question too many things and then plunge in it, because who knows, man, product markets swing, differently over time. So, and therefore, if you're already prepared, if you're already in that place, then you would probably be in the right place in time for it to take off. You never know. There are innumerable stories of, companies which were almost facing death, which suddenly, had one customer, one shot in the arm, and one silver bullet, and then everything, took off into a different trajectory. We've all seen that.
Awesome, Shiva. On that note, I will thank you so much. There are some deep insights that I have got, and I'm 100% sure that all the viewers who have reached this far, they have learned, and they're probably thinking about the next big opportunities, at least in the healthcare industry, if not generally, from the words of motivation.
Developed in 1970s, 1980s, right? So Epic and all these were developed in 1970s, 1980s. They've literally written their own programming language. They've written their own database. They're not using industry standard programming languages or databases. So the software moves very slow, very clunky. But organizations like Stanford and like big hospital chain networks, they've invested $1 billion plus to completely imbibe softwares like Epic in their systems. So my theory was that can a smaller startup say that, look, we're not going to use Epic, we're going to write our own system, and can we deliver better healthcare through this, our own system, and trying to solve this principal agent and incentive, do incentive alignment. And the other thing in India, in America, that's picking up is value care, where we can go to the insurance companies and say that, look, pay us X amount of dollars, say $2,000 to take care of this life for a year. Don't pay us for each interaction. So right now in the US, the payments are still based on interaction. So Stanford makes money every time I go see a doctor at Stanford. But our idea was, can we make a pitch to the insurance company, say that, look, pay us X amount of dollars per provider, per patient. So align my incentive with your incentive. So we did that with those 3-4 ideas, started it in 2013, sold it in 2022 October. And for the last year and a half, I took a little bit of a break. And now I'm doing another startup. It's called talk2.app. The idea is you'll be able to go to talk2.app/doctor. You'll be able to talk to a doctor. Talk2.app/structural engineer. You can talk to a structural engineer. Talk2.app, you'll be able to say /Shiva, and people will actually be able to talk to you if you create a profile on the system.
I see.
So the idea is,
what is it?
It's called talk2.app. So आप browser में talk2.app type करोगे तो वो आ जाएगा. And the thesis is that loneliness is a big epidemic, and not everybody can afford a therapist, right? तो लोगों से बात करने को चाहिए. A lot of men need virtual girlfriends. From starting all from there to a lot of people need to talk to doctors, engineers. And the other key insight that I'm betting my next 3 or 4 years of my life on is that a person would rather talk to a AI-enabled doctor instead of an AI doctor. दोनों में बहुत difference है. An AI doctor is जब आप सिर्फ एक AI से बात कर रहे हो, AI-enabled doctor है कि डॉक्टर फिर भी एक डैशबोर्ड पे सब कुछ देख पा रहा है कि AI मेरे behalf पे क्या बात कर रही है. So there's a little bit of foolish optimism. There's a little bit of realization that at the age of 47, this is probably my last chance to be foolishly optimistic. So that's what I'm working on.
No, I think your thesis that, people want to speak to an AI-enabled doctor.
Instead of an AI doctor. That's a very key insight.
Completely, right? We'll never always point a finger at Tesla if one of their cars, gets in an accident.
Yes.
Human error is condoned, right? We don't mind the human doctor making errors even after using AI. That is another allowance.
Yes.
We won't allow a machine to make error for us.
Yes. So, Abhi, it's at a very prelim stage, and I obviously get a lot of help from my friend and almost like a brother now, Miglani. Miglani से काफी मैं brainstorm करता हूँ, उसको prototypes वगैरह दिखाता हूँ. So this is what it looks like. talk2.app/ तो अभी तो मेरे internal आप programmer से भी बात कर सकते हो, teacher से भी बात कर सकते हो, एक YouTuber से भी बात कर सकते हो. So basically, all these personalities become AI enabled. So that's the thesis, but it's such a very so the domain is talk2.app. And thank you for giving me the opportunity to shell my own startup. Appreciate that, Shiva.
No, yeah, this is good. I think your core need is correct. I'm sure you have sized the market there a lot that, and at what price point you can push that.
Yeah.
Cool. So should we get back?
Yeah, Miglani, you are on mute.
Yeah. On that note, let's talk about you, Shiva. So from what I heard, and when we initially spoke, is you graduated from 1998 from IIM Ahmedabad. So 2 years at IMA, which is about 26 years ago. So tell us a bit about yourself. Tell us, why did you even want to go to an IIM, and what were you doing? Where did you grow up, and what did you study before IIM?
Listen, I grew up in Chennai. I was born in Bangalore. Grew up in Chennai. Went to what is one of the more well-known schools called DAP in Chennai. From there, I did my undergraduate in physics from Loyola College. Okay, it was also the time when my dad was not keeping great health. Okay, when I was in my second year. And at the end of the second year, no, he was an entrepreneur, by the way, right? He used to run his small-scale industry. And in Chennai, typically in our kind of families, everybody was into engineering in some form or fashion. And when we said engineering, we assumed it is automotive by default. We didn't understand that there could be other sectors engineering could cater to. It was like that, right? And he used to make certain auto electrical components, which is now you've got what is called the alternator in the car. In those days, it was called the dynamo or the starter motor.
Yeah.
Okay.
Yeah.
He used to supply it to a tier one, who used to then supply it to the OEM. Okay, so he used to make that.
And this was in the 80s and 90s you're talking about.
Yeah, I'm talking about the 80s. Yeah.
This is before like the Chennai or the Tamil Nadu car industry ecosystem wasn't even half as big as right now.
No, of course it was not even half as big, but it always had that DNA. Tamil Nadu and Chennai especially, right? We had, for example, Ashok Leyland used to be there. These are the large OEMs in those days, part manufacturer.
Yeah.
Then a lot of auto component companies were set up in the 60s and 70s, which used to supply to the rest of the country, right? The entire TVS group had its entire string of ancillaries in one belt next to each other. And that is what they did after their transportation business got nationalized or taken over by the state government. So with the compensation, they got into manufacturing. In those days, you needed a license to manufacture different products, right? Because it was still the license permit Raj. Then you had 2-3 other groups that were also into automotive. So you always had a supply of good automotive engineers. You had good set of machinists. You had good set of, process engineers in Chennai with regard to auto. That was never a challenge. Okay. So, and therefore you had a number of tier one suppliers there. It all changed when Maruti set up shop in Gurgaon. Right?
Yeah.
Because along with Suzuki came a bunch of Japanese suppliers. They all set up shop around the Maruti premises, right? And then the volumes that Maruti saw, no other OEM saw for a long time, right?
Yeah, for about 15, the next 15 years,
At
it
least.
was Maruti till I guess around late 90s is when
When I
the
set up.
Tamil Nadu ecosystem started revitalizing.
You had more OEMs coming in.
Ford and all that, they set up
Ford
shop.
came in, Hyundai came in, because they realized that, you have a good supplier ecosystem in any case. Talent was not a problem. So all of that. So they chose Chennai. Then now you have
So
got-
Shiva, this is a very big coincidence. Our last episode was with a guest who was right after and before his IIM days in the 90s. He graduated early 90s. He was managing one of the OEMs in Tamil Nadu.
Oh, which one is this?
Yeah, I think at the Ford's OEM. I forget the name, but it was like part owned by Ford with a slightly hands off. So he was with Ford and all that, which is why my recent understanding about the industry is coming from.
I see.
Yeah.
Was he with a company called Vistion, by any chance?
Yeah, Vistion.
Vistion.
So he was doing this.
Vistion is Ford's, ancillary.
Yeah, so he was managing Vistion back in the day in the late 90s. Yeah. But coming back to you, so you were in that sector. You never thought of becoming an engineer?
No, I didn't get into engineering, to be honest.
Yeah, why? It wasn't that a natural progression in your family, that engineer and then do the...
No, I'll tell you what. In fact, my brother got into engineering. He went to BETS. Being a forward caste in Tamil Nadu meant that you didn't have access to those local engineering seats as easily as others. And if you were not in the state board system, where you got the benefit of, extremely high marks, it also put you on a disadvantage, right? At a disadvantage. So I was a CBSE student. In those days, I got, I think, 89%. Okay, which is not a bad score in terms of my MPC. I missed getting into BITS. That was my goal. I knew that I was not cut out for IIT because I had too many other distractions, to be honest. Okay, so...
tell us, Shiva, I'm very curious. Tell us about your distractions.
My distractions in those days, I only was thinking and dreaming cricket, nothing else. Okay. I would wake up thinking that, when will school get over? I was playing for the cricket team, the school team. And in class, I would dream about, how we would have played today in the nets. Then once our chance to play cricket got over, because a small area, there was nothing that you could do if you finished your batting. Then I would go and play table tennis in the next row. So I would hang around in school till about 6:30, 6:45 and only then go back home. So that was our...
I mean, that's very plain vanilla distractions. I was thinking we'll have some more masala for our channel.
No, we were living in a time, we were in a boys' school and we were a set of foolish guys at that time who was not no end of ourselves. So we never thought that we should actually go out and then, accost the other gender or do anything of that kind. That was not the belief system then, at least, right? And what used to happen was we were all part of the science group in school. We always felt the commerce group guys were allowed to do all of these things. They were the more adventurous guys. They would go out and say, I went on a date, I met somebody, went for a movie, came back and all of that, right? Even that for us was, these guys are, they have cracked it in life. So we were a very different set at that time. Then what happened was, because of the fact that my dad suddenly expired when I was in my second year, I had no intention of, getting into the business, to be honest, right? At that time, I used to accompany him because he was not keeping great health. And then I would say, let me travel with him because it was quite a distance from our home to the factory. Some days I would go with him and sit there and then come back. It was nothing like what today modern day offices are, right? The factory was a small desk and 2 chairs on either side, a bunch of files on one side, a filing cabinet with a fan, on top. Sweltering heat of Chennai. I'm just trying to paint this picture for you. So it is not a place that you desire to go and sit and spend the entire day. You not you have Swiggy or Zomato or anything. The only thing that you had to eat was what you carried from home. And that would be in a tiffin carrier or whatever, as what you would call it. Right? So they would have that, then sit down, talk to people, then I would come back. And but when he died, things changed, to be honest, right? I suddenly realized it was a running business. And there was suddenly a bank that needed to be handled because they had set up limits. For us, our entire working capital was hypothecated. The stocks were hypothecated to the bank. We had certain orders to get to be completed and delivered to customers. We had a government PSU as one of our customers. We had a private sector tier 1 as another customer. And in the meanwhile, my dad, knowing that he was not keeping good health, anyway decided to have an arrangement with some of his friends who were also in the same industrial estate, who were at that point in time getting into automatic vending machines for coffee and tea, hot vending. Okay. My dad's background was that he was a mechanical engineer and he was a refrigeration and air conditioning expert as well. So the idea was for him to take a back seat. They would take over the entire facility. They anyway wanted to diversify into this. And he was due to go for his bypass surgery in about 2 months. Okay. So I had made all these arrangements. And then he had told them that, listen, post that, I'll take it a little easy. I'll just be a consultant for you as far as cold vending is concerned. Okay. So that was so he had initiated all these conversations. So when he died suddenly, I still had to ensure they were then, obviously my dad's friends were very genuine and sincere. They said, this is what we'd agreed. So we are happy to take over this on lease. No problem. But then I had still certain obligations to be completed. Right? We had to supply some goods, collect monies and all that. So that's when my first brush with the commercial world started. Right? I had to go to the bank and understand what this CC limit meant, cash credit limit. Ye kya hai? Right? And how do you make sense of this? So I sat with my dad's CA to understand a little bit. And then he would tell me that, start writing out all expenses in single entry. I didn't understand double entry, what it meant. And I would just write everything down and say, these are the expenses that we've incurred and all that. And then in about 3 to 4 months' time, we collected all receivables. I think we delivered on the outstanding order, got the lease agreement signed with my dad's friends, and then had to settle all the employees in the company with all of that. And they're also absorbed by people, so there was no problem there. Nobody lost their jobs. So all that was amicably done. The good thing was that he had tremendous goodwill. And therefore, a bunch of people came forward to help us out. Right from getting since he died intestate, which is without a will, getting the legal heir certificate done. And then, somebody, because it's part of the industrial estate, somebody came and told us this is what you need to do to transfer this to my mom's name, all of that. So all these things happened. I then understood what it means to be an entrepreneur, because you actually have multiple relationships, right, with different people. And they all came in handy at this point in time. And I did that. And in the process...
How many years did you manage that business?
No, man. This was like about 4-5 months of transition, right? Yeah,
okay.
About 4-5 months of transition, which is when I first understood what is accounting. Right? What is a ledger? What is a journal entry? What's a ledger? Because my CA would tell me, keep this in this form. I never understood what double entry was. I never used to understand the logic of double entry. Why did you need a second entry? Right? From writing expenses, I write expenses in a column. Right? If I write income in a column. Right? And he said, no, I want this called a cash book and all of that. So that was interesting. Then I remember...
How old was your dad when he passed away?
How old was my dad? My dad was 55. He died young. 55, 56 then, right? In fact, the reason I say 55, 56 is because nobody knows exactly what his date of birth was, which year he was born. Even his mom, which is my grandmother, has a very faint recollection. It could be 1931 or 1932 or whatever it is. It was all in that zone. Okay, so long story short, then I remember I picked up this book, How to Read a Balance Sheet. Okay. Which was published by the International Labour Organization. I think it was meant for collective bargaining purposes, right? For the trade union guys to understand what the company's balance sheet is all about. But it was beautifully explained as to what is a balance sheet, what is the left-hand side, what is the right-hand side, what are liabilities, what is owned, what is owed, and all of that. And then it had a kind of a quiz at the end of each section, which you had to close this and then write the answer and all of that. So I did that, which I thought was fundamentally, in fact, it set the foundation going for me as far as that was concerned, right? Then I became confident with this particular area. And then I finished my graduation. Then I was toying with the idea of, then somebody said, why don't you shift track? Initially I was thinking of, doing my master's in physics and going to the US. So I think those things did happen at that time. Then I picked up a job with a company called First Leasing Company of India. Okay. Which was technically the first leasing company in India. Okay?
Right.
So,
Wow. That was an innovative name.
First, the no-brainer, actually.
Yes.
It was run by this maverick called Farooq Irani. Okay. I think I joined him in 92 or something like that.
So were you like first employee of the first leasing company?
I was not. First leasing was 20 years old by then. Okay. Yeah, it was Chennai based. Okay. So, and then I was reasonably good with numbers. In those days, we used to run these lease models and hire purchase models. Basically, we would do any equipment leases and all that. I was there for a very short period of time. Then I understood how this entire thing operates. I understood there was a gap in the market. Okay. Then I started doing debt syndication. I would go on a scooter and go and meet clients. Saying that aapko lease chahiye, batao. Huh? Let me do.
And Shiva, when was this? Was this in early 90s? Is that right?
Yeah, 93.
93. So 93, I still remember. So 93, I was definitely in school when you were going on your scooter and getting...
Yeah, I was going in my kinetic Honda, let me tell you, in those days.
Yeah. Nice. Yeah, kinetic Honda. I learned to drive on... Actually, I learned on the Bajaj Chetak, but kinetic Honda, one of my uncles used to have, then I used to love it. And so now when I think about it, it was the first EV in India.
Huh?
It was the first kind of EV. Yeah.
Why EV?
Not just gearless, it was electric vehicle.
No, not electric.
I think they had like, or didn't it?
No,
Was
not
it that
electric.
battery then? No?
No, not electric, but it was gearless. So it was smooth. It was just, the pickup was phenomenal.
Automatic, right.
Yes, Shiva, so can you explain to us what is debt syndication? I actually don't understand debt syndication.
Debt syndication is a fancy term to do lease broking, basically. I'd go to a company and then say, listen, are you considering a financial lease? I will do the working for you and tell you what the cost of the lease is. Pre-tax, post-tax and all of that.
So what's a financial lease? Like you want to rent something, like lease an apartment or lease a factory?
No, it's
like
basically
leasing?
equipment, mobile assets. Nothing which is immovable. Okay.
Okay, so like lease a computer?
Machinery. It could be machinery, it could be computers, it could be vehicles, whatever. These were the typical three categories where people would do leases. Okay.
Okay, so you would help with basically a business lease ambassador card.
Yeah. So it could be, you could do asset financing, which was not linked to your buying term loans and all that. The entire process of going to a bank and getting a term loan for, buying 5 vehicles was a pain in those days, right? And you had to cough up a margin as well. You put 25%, only then, the bank will give you the balance 75%. So companies which were always, in our country, most companies are always over-leveraged, right? Undercapitalized always, over-leveraged, but highly ambitious, all three at the same time, right? So there is no concept of risk calibration at all in the business. But then, each one had their own path to win those segments. And we look at what is a good risk. So basically understood how to read a balance sheet, figure out what your surplus cash flows are likely to be, whether you've got the debt servicing capability, and then tell them this is the kind of lease amounts that you can pick up on the market. Here I am, this guy who will tell you, how to structure your lease, and I'll also place it for you. So I will do the origination and also place it with a leasing company, for which I would get an origination fee. Okay. So it was not my balance sheet. I would then place it with a lot of companies that were willing to do it in those days. Sundaram Finance was doing it, which was a big daddy there, Cholamandalam. Then all the companies from Bombay. Kotak was a very small company then, let me tell you. Kotak Mahindra Bank that you see today, Mr. Uday Kotak used to come to the first leasing office. I've seen him once as a lease broker. That's what he started life with. And he used to, his claim to fame was he would do bill discounting in a big way. He figured out that banks had LC limits which were available. He would go ask them to, release or get a bill which is a bill of exchange backed by an LC, and then say, listen, let me place it in the market. In those days, availability of finance was far more important than the cost of finance. Okay, so if you're able to ensure liquidity in the system, then you made money. So I did that for about 2-3 years, which is when I realized...
Did all this helped you during your IIM Ahmedabad? Like this is like on your, like by your knuckles, like you've driven your two-wheeler to go talk to a small business person saying ki ambassador lease kara deta hu. Lease kara deta hu. And then you go to IIM Ahmedabad, which is huge.
Correct. Sometimes I wonder, listen, I never took a step back and wondered what the clients would be thinking of me, right? They'll be saying that, listen, there's this cocky fellow who comes to see us. Just that he's young and nothing else. And therefore, I think they used to encourage me. Nothing more. Okay. I didn't know half the things that CFO used to know, but I would just confidently go and ask for a meeting with the CFO and tell them, I want to see you. I want to discuss this with you. They would, I think, just be taken aback by the kind of, I would say, misplaced confidence that I had in myself at that time. Right. So, and then, people are nice fundamentally, right? If you actually knock on their doors and you're persistent, they will give you a meeting. And then they'd like to talk to you. They're curious, now, who's this guy? Why is this guy trying to do something on his own, man? This is a time we should have actually gone out and, worked somewhere and then come back to see us. So, and in the process,
and you're 24 at that time.
Yeah, we were 24, 24, 25. And then I would go but I think what I did reasonably well in hindsight, without trying to be immodest, was that I would build trust very easily. I'd build relationships with clients. So over a period of time, they all would trust me with whatever they wanted. I'm not saying they would give me the biggest problems to manage, but this specific set of problems that they had, they would call me. So I would be the first person who would receive a call because they knew I would tell them the honest truth. I would tell them this will work, this will not work, this company will do, this company will not do it. Not give them a salesy pitch wherein, lead them down the garden path and not deliver. So they always knew that I would deliver. So I was doing that. Life was good. I'll tell you what the turning point was, right? That is when the GE Capital came to the country. They found a consumer company called Countrywide Financial Services. Okay?
Yeah.
And there was this gentleman called Vishal Pandit. I remember, who was a GM for them, who had come to Chennai. And I met him. Then he said, hey, you know what? We want youngsters like you. Will you take up the entire franchisee for Chennai? Right? You can set it up for us and we'll back you and all that. Then I used to ask myself, listen, why is he willing to back me? Because I only have so much to offer, right? Now, I don't have a huge balance sheet of my own to take these kind of costs. But he was saying that, no, we want to, encourage people and all that. And I realized that, listen, I would rather be on his side of the table. Man. I don't want to be on this side. Right? Okay.
And then you found out that Vishal Pandit went to IIM Ahmedabad.
I think he was from FMS or something, if I'm not mistaken. Okay. Then I realized that, listen, let me give this cat a shot. And I went.
Was it partly because there's too much of scooter happening here? I want to sit in an easy office.
No, I realized, two things happened. One is I said that, listen, I think I'm behaving like one of those big fish in a small pond. Okay. Business was very good. Trust me. Nothing wrong. It helped me fund my entire education later on. No problem.
Oh, wow.
Yeah. So the only thing is I said, listen, I think this way, am I actually going to be held back? And if I want to do something, this is the only time I have to do it. I don't have another chance. Now let me go full blast. That was my attitude. I think I was far more focused in those days than I am today, by the way. Okay, I think there was more hunger there's more fire in the belly, I guess, then. And then while I was doing this, I prepared for CAT. What I spent about 3 months preparing for CAT. Side by side, right? That was not the only thing I was doing. I used to, I think, solve one paper a day or something for the last 30 days, religiously. We had, what was those classes, man? What was it called?
Was it IMS?
IMS. No.
I also used IMS.
I think they used to send a packet, right? They used to send it.
Thoda yellowish sa paper tha, I still remember.
Even then it was yellow. Even then it seemed old and, As
Yeah,
you said.
yeah. But when you got it, it was started yellow. Yeah.
I think even the new thing was yellow.
It seemed like
I
that.
think I got it. I got someone second hand notes, I think. So I didn't know that new was also yellow.
No, yeah, maybe mine was also second hand. I'm not too clear about it.
In मेरा नया था, but I think they.
Papers to solve. I know a bunch of papers to solve. I would only read the editorial every day without fail. Okay. The newspaper editorial. And with this, I realized that actually it was not too bad, and I think I was doing reasonably well. So with that blind confidence that I had, I gave the exam. When I finished the CAT test, I told myself that I'm not done too bad, to be honest. Okay. I had this feeling that boss kuch to hoga this time. And I got a call. And see, after that, I think once I got a call, I was very confident. Yeah, to be honest, I went for the interview. I somehow felt that my experience was valuable. I believe that. And therefore, in the
95, 96, there were 4 IIMs. Are you saying you only got Ahmedabad?
I only got Ahmedabad. Yes.
And none of the other IIMs?
No, I only got Ahmedabad.
Wow.
Which is surprising, right? Because Ahmedabad
was rated number 1. Yeah. Ahmedabad was rated number 1 back in the day. And that's the thing which I don't think people are still able to figure out, that why do you get from this IIM and not from some other IIM? How does that black box work at all?
Nobody knows. In fact, I have gone to the institute and asked the profs. They have refused to tell me.
Maybe they don't know.
No, like what one of our famous profs told us now. A.K. Jain, there is this marketing legend called A.K. Jain, and his own inimitable style. He told us, listen, when we are setting the paper or we are conducting the process, even if God comes, he will not let him interfere with the process. It's like that. Only we know what we're doing. So
we have to get Mr. A.K. Jain on the show and get him to reveal the process finally.
Oh, maybe check. Maybe with age, maybe he's mellowed down. Maybe we'll talk about it. You can try.
Right. So you got Ahmedabad call and you cracked the interview because
I converted. Correct. So then I was also happy. To be honest, I was also getting a little tired of the scooter business, right? Running around and all that. Then I said, "Okay, chalo, maybe this is, a good 2-year break from what I'm doing." Then IIM was fantastic. I won't. The first few days were terrible. I said, "Where have I come to?" Ahmedabad is hot, dusty, terrible mess food. A bunch of new guys, many of them fresh out of college. And yeah, nice guys and all that.
So you went with 4 years work ex, I think.
Yeah, correct.
4 years work ex. So you must have been one of the oldest people in the whole batch.
Yeah, of course. 4, 5 years.
I know the demographics have changed right now.
In those days,
5 years is still older than the average.
The average would have been 2 years, 2.5 years, man, typically at that time.
So guys, I'm going to take a break at a hard stop at 10. Shiva, so nice talking to you. Yaar. I think interesting conversation to start ho raha hai. So you guys please continue and I'll catch up later. I'll watch the stream, okay?
Okay, all right. Thanks, Mix. Let's stay in touch.
Just stay in touch. Bye, Mix.
Yeah.
Bye, Shiva.
Yeah, let's complete this. We'll try to keep it very focused on your career, mainly.
So that you shoot, well, then I'll keep it focused. Yeah. Just part out.
Sure. So tell us, you said 2 years at IIM. Give us a synopsis. Tell us something really interesting, what you still remember.
IIM, I think, the kind of batchmates I had, outstanding. I think brilliant people that I engaged with. And I opened up my mind. Campus is so inspiring. Some of the profs are out of the world. Not to say that, every IIM does not have its own share of profs who are not great. So we also had that. But I think all in all, enjoyable experience. All the more enjoyable because I decided very early on, I'm not going to get into this rat race about grades. Okay?
Right.
It was very clear that I'm here to, absorb this place, enjoy, make friendships. This is not a labored effort. I just don't want to make it sound as like a conscious attempt to go and sit with people. No. that is what I like doing in any case, right? So I used to hang out with people, we had great fun, okay? And obviously, we got by in terms of our grades and all that. That was not much of a challenge, right? But we had so many interesting things. And end of the first
Did you
year,
start enjoying the food after 2 years?
then we reconciled to the bad food that we had.
Reconcile. That's an interesting word. And what about the heat? Because I am amazed that someone goes from Chennai to Ahmedabad and complains about the heat. I can understand someone going from
Man,
Bangalore.
I don't mind a humid place. I can handle that. I personally. This is dry heat, okay?
Right.
And there is very dusty. It's a dust bowl. In fact, even the cricket stadium there was a dust bowl in those days, Motera, if you remember.
Right. Yeah.
I don't know if you follow cricket, but Javagal Srinath picked up 8 wickets for 53 runs. Only he knew that where he was bowling. Because the ball never used to rise beyond 4 inches there. And half his wickets are LBW or bowled because the batsman couldn't sight the ball. Because the minute it hits the pitch, there'll be only dust. It was that bad. Okay. So
no, I absolutely remember. Firstly, you can't grow up in India without following cricket. But there are differences. Some people do it more, some people do it less. I would probably be called an average to above average cricket follower. I absolutely remember that Motera was like, I don't know how Javagal Srinath, it was like supposed to be like all those spinner tracks. Almost, but then Chepauk wasn't different, is it? And I know we'll like completely deviate into a cricket thing.
No, but Chepauk was at one point in time, Chepauk was a very, very fast wicket. 1975 West Indies versus India. G.R. Vishwanath's 97 not out is rated as one of the finest knocks by an Indian ever. Because against a battery of extremely hostile bowling at that time.
Yeah.
Because Chepauk was, I think, after Perth, supposed to be one of the fastest wickets. Maybe Chepauk, and then Port of Spain, and then Perth, Port of Spain, and then Chepauk. That was the order. Over a period of time, Chepauk, they started making it a spinner's track. Then it became, it was called a sporting wicket, which means you would at least see a result after the 5-day game, and it won't peter out into a boring draw, for sure. But then Ahmedabad was, one never knew, it was always, the pitch looked underprepared all the time, there were cracks. So either it will be a rank turner in day 3, suddenly the wicket will deteriorate. Till then it will be, dust all over the place. So one never knew how the wicket was. Today now that is now subsumed into this entire magnificent complex, called the Sardar Patel Sports Complex or something.
Yes.
And the stadium has got renamed as Modi Ji Stadium now.
Yeah. But I'll tell you the reason, because in the 90s, which is probably which I remember most about my cricket, is all the 5-wicket hauls, invariably, Bajji, Kumble were in Chepauk. That's what I remember, that Chepauk ja rahi hai to Bajji or Kumble, one of them is going to take a 5-wicket. And if the two of them didn't, then there was Venkatesh Prasad, which was like just a glorified spinner.
Yeah.
Sorry about that. I mean, I love him. I love the bowler, but he was like just a bit more than a spinner. He was like,
no man.
Sometimes there were debates about is Kumble faster than Prasad.
Correct. Absolutely. Venkatesh Prasad's unknown contribution is that he has actually decimated the careers of multiple people at the MRF Base Foundation. They're asking them not to bowl fast and bowl at his speed.
Right. We were coming back to Motera and Ahmedabad. So you started, you got, I wouldn't say used to the food, you just resigned to the fact that this is what it is.
Yeah, we resigned to the fact.
Joined the people.
Our high point was Friday evening, what was called Harvard dinner. You used to have something called Harvard dinner, wherein you had, I think...
Burger pizza, right?
No, it was a sandwich and salad or something. Because it means that they really couldn't mess up too much, right? So that used to be, eagerly awaited. So right. Friday evening was that, right? So we used to have that. And then we figured out our way around town, right? We knew when to go, where to go, and all of that. So that was not too bad. But then what also happened at the end of the first year was that we had the elections coming up, right? The Student Advisory Council, and what was another post called the independent member. Technically, on paper, it's supposed to be the final say on student affairs. They're like an arbitrating body. independent of the student body to reconcile any differences of opinion and all of that. So I contested that post, for that post, and then I won. And I set up my entire team. And one of the biggest responsibilities for an independent member is to run the placements. Okay, so I could tell you I was a placement head.
So you didn't have a placement committee made of students. So this was the placement.
We had. I was a placement head. Then I had to form a committee, right?
Okay.
So I also formed a jumbo committee. We had 18 DOM. They said 18 people will be on the committee. Okay, so because there's a lot of information asymmetry, because always a worry was, oh, there is no rep in my DOM. When somebody goes back from the committee back to the DOM, then obviously there's discussion, everybody's anxiety is taken care of, right? So the previous year, I think they had about 8 or 9 people. I said, no, I'll expand it. There's nothing so holy that it needs to be a smaller number. And more the merrier. So then we could get more work done. We had larger groups for different tasks that we had to do. So I was fairly engrossed in the second year on placements. So if you ask me much about what I did in second year, it's a blur in my head. Okay, I used to attend some of the elective courses. I had a reputation for sleeping through in most classes. I must admit that. And I would go in with a lot of enthusiasm. I will be awake for the first 10 minutes out of a 70-minute lecture. I would wake up at the end of minute 50 or something. Okay. And then quickly try and understand what is being said. I will do my CP for between minute 50 and 60 because the RA would be sitting next to me, given my name in the alphabetical order, and then ensure that I have taken care of the requirements and then move on. So that was my standard operating procedure. So on campus, when I was independent member, in fact, there was this thing that used to go around saying that Shiva's third eye never sleeps. We can't say much about the other two. So that was actually, in a way, a true depiction of what you said. So I enjoyed my stint in the second year as placement head. It was
so you were placement head. So tell us about your summer placements and final placements. Where did you do?
Oh, my summer placement, I was with this company called Whirlpool India.
Okay.
And in Whirlpool India, they had started a customer financing business called Whirlpool India Financial Services. They wanted to do dealer financing and consumer financing, both. So aside of this person in Delhi, I think he was an IIM Bangalore guy, if I'm not mistaken. I don't remember the name now. He said, why don't we do a research project? So, okay. So I went to Jaipur, Jodhpur, Jaisalmer, Karnal, whatever, those parts, and went and studied how the consumer durables industry worked. Typically understood what dealers wanted, what was the kind of stocking levels they had, and what is their perception of whether consumers are the one financing options or not, what kind of products to be offered. It's not that they didn't have products. Okay, they already had rolled out products. I think they wanted some more better understanding on this. Then subsequently, I was staying in Delhi, in IIT Delhi, in the hostel. It's not a great place to be there in the summer, to be honest. Okay, so it was really, really hot.
Coming from Chennai, you find Ahmedabad hot. Then once you get adjusted to Ahmedabad, then you reach Delhi, which is like even worse in the summers.
Delhi in summer is hot. There is no two ways about it.
Absolutely. I grew up in Delhi. I know 45 degrees and I have
45 degrees. No AC. I'm in the PG hostel.
I grew up
PG hostel.
Didn't have an AC either. So I know
PG hostel, IIT Delhi, the topmost floor, sweltering heat. There's nothing to cool you down. I remember we would throw water on the floor, the cement floor, and then sleep on it. Yes. Okay, that's the only way we could manage that. And the canteen was good. We would hang around there, and those places were nice. But it was damn hot, man. It is not the best place to wake up in the morning and then wear so-called formals which you never wore for the rest of the year on campus, and then go to office. Wear some black shoes and all that. In those days, you couldn't show up in jeans or t-shirt, right? You still had to wear some formal clothes and then go. They figure out how to iron your shirt or whatever. So you had to do that for a while. But once you go to office, then it was AC. Then you sit down, do some work, pretend to do some work rather, and then wait for lunch. Then say Then therefore, I was quite happy to, travel out to all these places. And I realized Jodhpur was terrible. It was equally bad. Then
I was about to say that, Shiva, you're saying from Chennai to Ahmedabad hot, from Ahmedabad to Delhi hotter. The only thing left after Delhi is you're going into Rajasthan. And there you reach Jodhpur.
Oh my God, Jodhpur! I can still vividly remember how hot it was. Okay,
Yes.
my God, Jodhpur was, But anyway, I said, listen, I have to finish it. Came back to Delhi. Then I said, you know what? Why don't I go to Bombay and do something on a corporate employee credit, for example? In those days, there used to be these consumer durable schemes that companies used to buy as a group, wherein the repayment would be from the salary deduction process. Okay, so I said, let me go and study this market. Let me go to Bombay and do this. They thankfully allowed me to go to Bombay. So half the summer I was in Bombay. Okay, and then Bombay obviously will always have a large cluster of your batchmates, right? Wilson College, ENGO and all that. So
Yeah.
I was there. I finished that quickly and came back to Bangalore. Then started my second year. That was my summers. Then my final placement was with ANZ Greenlace. I was a placement head. I did not apply to the bank at that point in time when it come to campus, because my thing was very clear. Anybody who wants me to write some 4 open-ended essays, I will not apply to them. Tell me more about yourself. Tell me about one incident that changed your life and what was your learning. I said, I don't have the time. I will not do it. I remember that ANZ had this, so I didn't fill up that form. Because otherwise, what I only used to apply to those companies where I did not have to fill up an additional form with open-ended questions. Where you just bung in your CV, then you're good to go. At Greenlace was day 1 on campus. After the process got over, the HR lady in Greenlace said, hey, what are you doing? I said, no, I didn't apply to your bank. No, but the head of corporate bank wants to meet you.
But how did they know? Was it because you were coordinating as a placement head?
Yeah, she was interacting with me, right? She was wanting to get her slots done and all that. And I was fair, I guess, but I was also tough with most companies. In fact, I still remember that there was a huge scare that McKinsey won't turn up on campus because they're very upset with the placement committee that they're not being given the slot to meet people earlier and all that. I told them, boss, it won't work. Sorry. Same rules apply to everybody. They're always looking for this advantage, right? Seeking advantage. Nothing wrong. Yes. Each one has to play that game. In fact, they would send the freshly minted graduates to come to campus 2 weeks before, generally snoop around to figure out who are the good guys so that they can put them on the short list. All that they will do, right? So it is, I guess, par for the course. So they had spread this word around that McKinsey is very unhappy that they're not being given importance and all that. Because what we did in that year, not to belabor this too much, we said that this entire placement process is getting to be too much of a drudgery. So we said we will have the distinction between the placement day and the calendar day. So we will start calendar day 1, day 0 companies will start and finish on calendar day 2 in the afternoon. So there'll be a break for students also to recoup if required. And then calendar day 3 would be day 1 companies. They start at 9 a.m. and wrap up again by 1 a.m. So it was basically this day 0, day 1 is complete bogus, right? It's basically where you are in the chronological order. When do you go, right? In that format. So on day 0, you had McKinsey, you had, I think Lehman came for the first time. Deutsche Bank had come for the first time. First time Lehman came to India, right? They picked up 5 people from our batch. So what we did well that year, I think, was we cracked international placements for the first time ever. So we had 42 international placements that year, which was a huge jump.
42 in 1998. That's a huge number.
A huge number because there was a concerted effort. We felt that this was a time to go hard on it. I had an excellent batchmate of mine in the place Com who would work the phones, through the night, talk to companies and say, please come, you're missing out and all that. And we had a huge list of companies, man, because we had Lehman alone making 5 offers. We had Deutsche Morgan Grenfell making 2 or 3. Then what we had a lot of companies. We had a company called FMC make 2 offers. We had, and I'm not able to recall the entire list, but we had 42 offers, international offers and all, which was a huge step up from the earlier number of, I think, 14 or 15 that the previous batch had. So in a way, the first time, we kind of made that.
I think, Shiva, that's a tremendous achievement, because I don't think after your 98 placements with those 42 offers, IIM Ahmedabad ever looked back. Obviously, there might be some global macroeconomic hiccups along the way, but that set the tone for the future, right from 98,
No, absolutely.
2000.
Yeah, I just said, I don't feel too comfortable blowing my own trumpet, but I think clearly that was a discontinuity that was created that year, right?
Yes.
And then I think then the trickle effect also happened. Bangalore and Calcutta also started seeing more international placements. But I think all credit to this particular batchmate of mine, Vivek Trilokinath. He's an investor in Bombay. I've not met him too often in the recent past, but then he was single-handedly, doing this, and I still remember those days very, very fondly. The kind of effort he used to put in, to get this off the ground. Right, so if he's watching this, I think hat tip to him, even now. And we had an excellent team here, because we had 2-3 people, working on the brochure, for example, right? It was amazing team effort. We had 2-3 people talking to local companies. Then we had 2-3 people actually managing the anxiety of the student body. I still remember once I was woken up at 1 o'clock and said, let's have a meeting. There is a huge issue. I said, okay, let's call for a meeting at 3 a.m. But everybody showed up, because I think people are anyway, they're having sleepless nights in those days. So 3 o'clock in the morning, the only discussion point was, should we put the 4th term grades in the CV or not? And how critical is that? Because the 4th term grade is non-standard, right? As you know, because it also has electives. Should we have that or should we not have that? I said, listen, guys, what are you smoking here? At 3 in the morning, you want to discuss this? Chalo, karte hai, right? I don't think it makes a material difference, but for a lot of people, this was probably the most important issue in their lives at that point in time, right? So I think we came to some conclusion. I don't remember clearly, but I think we said, you write your first year separately and write your GPA, including the 4th term, separately or something like that. Maybe I'm wrong, but we came to some conclusion. But I think it went off very well there. So I think, great people, great opportunity to meet industry leaders. I remember Windy Banga coming in that time. And again, he asked me, why have we not applied to Lever? I said, sorry, but, your firm is...
Yeah, I remember Levers and PNG, because I was a marketing focused person back then. And Levers and PNG just made you write endless things.
Yeah. So...
I mean, I know I did write. I didn't get in either, partly because I only wrote for the summers. And then I got in another company, which where your ex-classmate and my ex-colleague worked together. And that was Colgate. So I got in there, got a PPO there. So I never applied for the final. But I still remember, even for summers, Levers and PNG used to make us write like... And summers used to happen like, or at least the forms used to go at the end of the first term or something like that. And my recollection still was, what should I write? I have no clue what's happening here. I'm still not ready for starting at MBA. Unlike you, I didn't go with any work ex. I just went there pretty much after graduation, and I was like, I have no clue what I want to do. I know I want to do marketing, but beyond that, all these things, I mean, are they choosing copywriters or are they choosing marketing people? I didn't know that. Yeah. Anyways, Shiva, so from my side, hat tip to you, because I think because of your 98, the international placements and all the good work that you and your team spent, all the hard work, like you mentioned, even IIM Bangalore and all the other IIMs got that trickle effect, not just in those years, but also in the following years.
Yeah.
But let's come back to you. So ANZ Grindlays, you got that offer. The HR somehow poached you from there and you joined there.
I joined.
And what happened?
I joined as a lateral hire. right?
Right.
So they were willing to make me a relationship manager in the corporate banking division. I had another opportunity to join a company in Hong Kong, which I refused. And there was also the time on the personal side, I was seeing my wife. She was in Mica in those days. So I felt Bombay would be closer to Ahmedabad, and therefore, decisions got made like that. If I joined Greenlace. And, but as luck would have it, after I accepted the offer, after I came back to Bangalore and was all ready to go to Bombay, they called me and said, you know what, urgently there is a problem in Chennai. Why don't you go to Chennai? Okay. So they changed my location of posting immediately. And then I joined Greenlace. I had other batchmates of mine who were also in Greenlace. There was a large batch that had taken that year. You think about, I think from Ahmedabad alone, we had, I think, about 8 or 9 people, if I'm not mistaken, who joined Greenlace. So we went through this training program for the first 2-3 weeks in their training center in Chennai. We did that. Then I started my role as a relationship manager in corporate bank. Didn't like it one bit, to be honest. It was all clerical work or nothing more. But had a lot of these trappings of being in a foreign bank, right? So all that was there. Never got too enthused by it. And surprisingly, what also happened was when the bank was going through the first of its 2 or 3 restructurings that happened. Not going to affect us because we are just new joinees. But the entire senior management of the bank, they got into a paralysis mode. Everybody was worried about their jobs because they had to reapply for their jobs. Okay, so there's more focus on that. So nobody cared much about, meeting a customer or, pushing business or having growth targets. And the bank realized that there are no targets per se. Targets are broadly communicated. They're not reviewed aggressively every 15 days or, every month or whatever. Once in a while, when the head of credit comes down or the head of corporate bank comes down and says, oh, listen, why are we not putting out more money in this market? And then there will be a discussion, and then you could talk about, why it happens or why it doesn't happen. So what happened was, by then, I had this friend of mine who was in GE Capital. GE Capital just set up shop in India about 2-3 years
ago. So was this the same, the countrywide guys, or was that?
Well, not countrywide. Countrywide was consumer, right? This was GE Capital Services India, which was the holding company for GE Capital in India.
This is the one that became Checkis. Is that the one?
No, this didn't become Checkis. This is the first company that GE started was called JEXI, GE Capital Services India. Okay.
Right. Okay.
So it was a holding company for the consumer business, which was countrywide Consumer Financial, which was a joint venture of the HDFC at that time.
Right.
It was the same company that also did a GNU with State Bank for credit cards. Okay. It's called the SBI JV. And the only business that this holding company would do was commercial finance, which was basically corporate finance equivalent. Okay. So I got an opportunity to work with them. I joined them. So I got posted to Gurgaon. And they said, you know what? Six Sigma is very important. Quality is the way to go in GE. So you have to become a quality leader. So please get your black belt going. Okay, which means I have to do 3 projects. So I got down to doing that. What do I say? It was interesting.
So this was the Jack Welch days, right?
Jack Welch days. So quality, Six Sigma, they were all in the buzzwords in the company. So you have to be a quality leader to run a business, which I fell for it, and therefore I did my quality projects. I think the takeaway for me was that quality is more a belief system, that you do things right. It's not about the measurements that they had, right? Because some of these measurements were a little arbitrary, to be honest, right? They would baseline it and say we're at 5 and then we move to 5.5. Heading towards 6. There's a little bit of the lack of validity in how they were doing it, but that is okay. But I guess some of it is par for the course. But I think the important takeaway for me was that, can you internalize that when you do something, can you do it right the first time and not indulge in rework, right? So what was called the first pass yield, I think it was a brilliant concept. So it makes you aware that when you're doing something, get it right the first time. I think that consciousness, was very valuable. I like the way they used to make their pitch decks, to be honest, right? I was coming from Greenlace where you would write a credit memorandum which used to run to 30 pages, 35 pages. It was in Word. Here, the same thing for the same company, we had to do it in about 6 or 7 slides. So we had abstract, right? What was relevant, just say what we will track, why this should be done, what are the risks, how will we get out if there's a problem. So all crisp. So the power of abstraction and focus, I think GE definitely had. They were
from what I understood about the GE decks was they would police it that you cannot go above this and you cannot change the format. This is it. This is our structure of presenting. Is that correct?
Mm-hmm. Pretty much. So typically the format was simple, black and white, no color, number one, as a rule. 2, you would have the headline should be your conclusion of the slide or whatever. You say what, then say why. Then you have a takeaway box which then says, therefore, what next?
Yes.
Yes. It's very simple. In terms of the thought process, keep it simple. I think their ability to simplify things and execute was outstanding. Okay. And to do it across multiple businesses, across geographies is no mean feat, according to me.
Yes.
Okay. So they had a fantastic employee communication system. If Jack Welch says Six Sigma, everybody in every business down to the country manager and his 3 downs will talk about Six Sigma for the next 90 days. Right? You can call it parroting of what head office says, or you can say complete alignment with what your headquarters is saying. Right? Yes. No, that was amazing. Their communication structure was outstanding.
And you had just come from ANZ, which was, you felt it was more of like clerical work. So was the work different also beyond the Six Sigma training?
No, actually, to be honest, in Greenlace, there was a lot of clerical work. We was also supposed to look for new business, also manage existing relationships, right? But given the context of what was happening and given the kind of constraints we had, we really couldn't do much. But in G, that way, if you were in sales, then you could go and, your risk boundaries, you can go and talk to anybody you want. And since we're also an NBFC and not a bank, right? There was no restrictions in the kind of structures that we could do. You also had negatives because we were not a payment system like a bank. So we could not offer working capital like products, right, to our customers. Right. So the pluses and minuses, this is more structured finance. And I think we did well. I was there for almost 2 years. You're right. That is when a friend of mine called me and then said that, he was working in a company called Cambridge Technology Partners in Bangalore. The entire top team of CTP was moving out to set up a new outfit. And then he said, why don't you come and join us?
I think I remember those times because that was like just after our placements and I had a few friends. We do have common friends in those Cambridge Technology Partner days.
Okay. Who is this Saurabh?
We'll come to that. Yeah. We'll come to that separately after we finish this.
Sure. So those guys were there. And then I was the only non-CTP co-founder in this new company called Orbity Consulting. Okay. So I came from a financial services background. I said, okay, it sounds interesting. Didn't think this through too much in those days, right? I was just keen on doing something that was more exciting. And I think that's been probably the continuing theme in all that I've done. So then I joined them. We raised capital, so I helped them do the capital raise. We did a bunch of good things. There were some issues that were not okay in what we did. There were some integrity issues with the founder. While we were technically part of the founding team, then we said we have nothing to do with this. 4 out of the 6 quit on the same day. I was one of them. We came out. Because for me, business can fail, there's no problem, but integrity is non-negotiable, right? So for me, that's something that I've always maintained in whatever I've done. And I have multiple incidents that I can talk about without taking names, of course, where I think I've seen from close quarters how people are willing to be compromised, right? Not just, straying, but you're also completely okay if somebody else strays and they look the other way. That's also there.
Right.
Right?
So what were you doing apart from fundraising? You mentioned you helped them fundraise.
We created a unit called Digital Business Services in those states.
Okay.
We felt that digital is going to become big. Internet is going to create a whole set of opportunities. And one of the important things was when you build internet, when you're part of the internet ecosystem, building key partnerships becomes important. Right? So in those days, when I look back, I look at all of those things and, it seems so foolish now. But then you tell a customer, if we came up with an idea, listen, I can try and get you to X, Y, Z. We can form partnerships for you. And that'll actually drive value in your business. Those days, while valuations were there, they were not as rich as what it is today, right? For these kind of businesses. I think consumer adoption was still not a proven fact at that time. While you could have technology to build a business online, you could possibly digitize some workflows and possibly digitize some products and services as well. Customer acquisition and consumer adoption of the category online was at the very, very nascent stage, right? And it also, the barriers to that was poor connectivity, higher costs, and and consumer habits take the longest to change.
Yes.
This is why I keep telling people, technology changes the fastest. Companies take much longer to change themselves. The consumer changes the last, right? When it comes to changing habits. So I was there effectively for about a year and a half. 9/11 happened during that time, but the investor was very good in sticking to his commitment, and he did put the money, notwithstanding 9/11. We tried a few things. Some of them worked, some of them didn't. And this event happened, and 4 of us came out. And once I came out of that, then I think for 2-3 months I was at loose end, figuring out what to do.
Wow.
Okay, which is when one of my former colleagues at GE Capital said, why don't you speak to this gentleman called Sandeep Bakshi? He is now taken over as the head of ICICI Lombard in Bombay.
Okay. Okay.
He was an ICICI Limited Delhi. And Sandeep said, he was traveling to Bangalore, that he would meet me here. So I met up with him. We had a good discussion for about an hour and a half. He was trying to convince me to join ICICI. To be honest, I wasn't too sure. I said, listen, you're a great guy. ICICI is a great name. The insurance is not a business that I'm really keen on because all that I know of insurance is that an agent comes and gives me one fat piece of paper, which is called a policy. Nobody opens it, nobody reads it. Right? It's for my car, whatever. I have this. I'm still not convinced. But he would keep telling me, if you're coming to Bombay, come and see me. I met him at least twice or thrice after that in Bombay. And every time I went there, to be honest, he would take time off and meet me and have coffee with me and said, what have you decided? Are you joining us or not? And then finally he told me that, hey, listen, I know you're not convinced about the category, but think of it as a management challenge. We're trying to get this business off the ground. Why don't you come and be part of the team? To be honest, I was also evaluating a lot of options. I had one option with the BPO, which I wasn't convinced again. Early days of BPO in India.
Mm-hmm.
Then between that and ICICI, I chose ICICI. I joined ICICI Lombard. My initial posting was in Bombay, which I said I will join in a few months. And then finally never went to Bombay, to be honest. I was supposed to be head of their bank assurance business on day one. I did not take on that role. Subsequently, I stayed back in Bangalore and I created a new business for them, which was around structured products. Okay. And structured products was primarily driven by what we called as the liability insurance products category.
Okay.
It was your product liability, product recall, professional indemnity, errors and omissions programs for a whole host of industries. Then you had directors and officers liability insurance. So these were all balance sheet protection products for companies, which required that you had to go and meet the CFOs of companies, which I was comfortable doing. All right. So I took on this as a one-man team. I started in Bangalore and I grew the entire business from nothing to market leadership in 18 months' time. Now, when you look back, you'll say, oh, listen, that was fantastic. I don't think it was fantastic beyond a point. I think it was a natural evolution, right? And I think we got certain things right. We were also lucky. I think that's the way I see it. They're very clear that, we would actually go after the most sophisticated customers in our universe. And if we're able to service their requirements, then selling to tier 2, tier 3 customers shouldn't be a challenge. So I built a team and I was very clear for the top 3 or 4 customers. I would be everything right from the peon to the business head, right? I would go service the client. I would meet the CFO, be it an Infosys or a Wipro or a TCS, and I would stitch the entire program for them. And they were, to be honest, they were very encouraging of my involvement in their business. And I built up, I think, competence as well as, I would say, trust, most importantly. That they could trust me with their confidential information, and then they would allow me to structure the entire program. I would place it. So our business was on a roll. Yeah, it was nothing to. There was no worries at all. But our entire category was small, right? Our entire category was about 500 crores, 600 crores in those days, and we were 22% of the market. My view is that you can grow, but as you keep growing beyond the top quartile, you might pick up lots of good risk, right?
Right.
This is about de-risking. You shouldn't pick up all the risks that you see in the market, fundamentally. So I did that for a while. We were very profitable. We were probably the only business that was profitable in the company. We were returning capital to the business. Every other business, is motor insurance or property, was all sucking capital because they were running into. They were in the growth phase, right? They were adding people and they were in the rollout phase. And understandably, they were not making money. Right. That said, I got a little tired of the business, to be honest, after 4.5 years, 5 years.
So let me just rewind. So 4 years after IIM, after graduating from IIM, you got into Lombard, where you were the business head of a couple of their products or businesses. And then 4 years into that company, you got bored of being the business head. Now I'm getting really curious. What next? What did you do if you're getting bored of a business head? Being a business head, what did you do?
To be very honest, I said, listen, this is going to be a year-on-year game. It's about the same thing. I need to do something more. Okay. Right. Inherently, I think I was restless. I still am restless by nature. And the flip side is that I'm therefore curious to know what else can be done. I don't mind tinkering with new stuff and figuring out. I think most businesses are not rocket science. Unless you're doing something in deep tech, right, you can figure out. I think you have basic business acumen and you're willing to put in the hard yards, you'll be successful. That is my simple theory about most businesses, right? I anyway thought that IIM MBA is over-engineered for the Indian market. They could have very well sent us home after the first year. Second year is a complete waste. India is nowhere close to the sophistication that is required. We do case studies, which is from the West. And there's a body of knowledge that we have. But I think, frankly, we don't need to be so deep into those areas because it actually creates dissonance sometimes because the expectations from a company are much, much higher than what it is when you join them.
Yeah.
You think they're sophisticated, you think they're deep, you think they've got well thought through strategies to respond to markets and all that, and you realize that maybe it is not the case. And it's sometimes driven by a host of multiple factors, sometimes including personal agendas as well, whatever. You understand, that is life, right? Fundamentally, it's not a problem. So I moved on. In fact, Sandeep was very upset that I left. Okay. And the general buzz was that people thought that I'm actually jumping ship to join competition.
Who all were the competition for Lombard? You said you had about 25% share, 25% share. Who else was there back then?
There was Tata AIG for us. HDFC Chubb was there. Then one-off you would find Bajaj Allianz. Okay. And then the PSUs were always there, New India and some accounts.
Right. So people thought you're going to one of these direct competitors?
Or joining one of those.
You obviously did.
One of those intermediaries. Actually, from whom I had multiple offers, right? Marsh, Indian, or Willis, Howden, and all of them. They all approached me. Okay. But to be honest, I said, no, man, I'm not going to quit one insurance provider and join another one in whatever form. That's not my game. In that case, I cannot continue. There was no stress for me to leave. Right?
Yes.
In fact, one of the trigger points was also that at that point, Sandeep also wanted me to move to Bombay, which he was after me for a long time. And I never understood the value of being in Bombay, given that my business is spread across the country, given that most of my team was anyway sitting in Bombay, and they were the most productive when their boss was not breathing down their neck. Okay? Right? I understood that very well and very early in life. That however great you are, if you are a boss, then you will get cursed. Right? There are no two ways about it. So when you call people into the room and you have a meeting, they will nod their head vigorously as if what you're saying is gospel truth. I'm sure once they go out of the room, they'll be cursing you. There are no two ways about it. So I tell them that, listen, if you have a difference of view, speak up here. I have no problem. And then, and it also was my belief that, listen, when people don't speak up at a meeting, it doesn't mean that they don't think, right? They have a point of view. They only choose not to talk about it in a group setting, right? So I used to tell my guys, listen, don't ask me if I get up at 4:30 and leave. At the same time, if you don't have work, please get up and go. Don't stay back. There might be days I'll stay back till 8 o'clock or 9 o'clock, because I have to talk to London to get some things done. I don't expect you guys to, stay back because I'm staying back. You hit your numbers, no problem. Do what you want. So it was a department or a division that people were willing to give an arm and leg to be part of internally. They would want to get transferred to this division because I was also very close to the head of HR at that time, and he would tell me that a lot of people want to work with you, which I thought was, I would take it as a badge of honor. For me, it's not about, how big a business I was running. It's not about how profitable it was, but it was about how people felt working with me. I think that was very important for me. And I think it's not that it was all about being smooth and nice. I would challenge people, for sure. I would actually be on their case, and I would get very intense on some issues. At the same time, I think, again, I have to say this, there's an assumption that I was always fairly reasonable and fair with people. Would never promote any kind of nepotism of any kind within the system. And I would be frank and open, and that was my style. Right? So that worked. Not to spend too much time about these issues about myself. But then I came out of Lombard, and then I said, we'll figure out.
So you left Lombard partly because of the Mumbai move pressure, but you didn't have a job. You didn't
No.
because you had a job offer.
No. I quit blind. Right? And I was very clear I will do that. I said, listen, life is not so complex and difficult that you can't manage. That was my thing. And then what happened at that time was also there was this manufacturing company, which my brother and I had known that family and the entrepreneur for some time. They were a tool room and a press shop. Okay. And that gentleman had passed away, and the kids were running the business. And one day they came to see me and they said, listen, I think we are struggling to make some payments to suppliers for material, and we're worried that we'll get into a problem. And then they actually wanted to borrow some money. Okay. And I spoke to my brother, and we said, listen, I think we know them well. There's a real problem. I said, I looked at the numbers. Typical SME problem, which is use short term and fund long term, or use short term working capital to fund your personal expenses. Problem had compounded over time. And they are, but they have good capability. They have good customer list. Visteon was one of the customers. Right? We were supplying electrical stampings to Visteon, which we were making alternators for the OEMs. We were supplying electrical stampings to Valeo. No problem. Good customer base. No problem. So then I said, okay, let me put in some money. My brother also put in some money. Then I slowly started getting involved to restructure the entire operation. Okay.
So did you go into as an owner or just as an investor?
No, I picked up equity Between my brother and I, we had 30% of the company. Okay. But the idea was never to get involved. It was more about, saying, let's have a stake and see where it goes. Okay. But then in 2 months' time, I realized that I had to get involved. I had to protect my principal. Okay. So which meant I said, listen, short of getting into the shop floor and figuring out how you do your production, I said, we'll do some fundamental changes. We will not use this. We will not, with the tool room that we have will be a captive tool room. We will not do commercial. It won't be a commercial tool room because a commercial tool room takes away bandwidth. You never make money on a tool room business. It's batch processing. It looks great on paper on day one when you pick up the order. There are always delays in the project completion, and there is a huge delay in receiving 100% of the monies. There's always a retention amount, 15% will never come to you. It will come to you after 1 year. It is not worth the effort and the stress. And the same effort, bandwidth, you can actually direct towards your production business where you can make more money, where there's an opportunity to scale. But the production business needs a tool room to make your tools and dies. To that extent, make this a captive division for the production business. So the only revenue stream will be from the production business. Okay, so we made that shift. We changed the bankers. I got Kotak to come in as the banker. The earlier bank was, I think State Bank of Mysore or somebody. So went back to customers and did some price negotiations because they were in a curious situation wherein the more they produced, the more they were getting into the red because on a unit basis, their contribution was negative.
Right.
Okay. Yeah. Customers wanted the product. They wanted more and more of it. But they were not willing to change the price. So I had to go there and do a price negotiation with them. In the auto industry, nobody does price negotiation. Yeah, it is off season or off cycle. They'll give a price increase discussion once in 2 years, and then they'll give you, if you ask for 6%, it is the purchasing manager's brief to bring it down to 3%. People continue to supply, and some of them can do it provided on a unit basis your contribution is positive. Right? Here it was not. So I went them and asked them for a 20% price increase, which is unheard of. They felt offended that somebody can come and ask them for this price increase. I told them, the choice is yours. If you don't give this to me, we will stop supplies because we won't exist. Very simple. You decide. If you have another supplier who's willing to give you this price, they said, oh, somebody else is giving you the same price. I said, you must shift all your procurement to him. You have 2 suppliers, understand? We are currently supplying 80% of your requirement. You'd rather take 20% of your requirement. I'll service you for 3 months and then I will shut this business. So that you at least have continuity, but till the time you ramp up with the other guy.
And at this point, you were saying this very honestly, this was not a negotiating tactic. Or was it? Or was there some level of negotiation, posturing happening?
It was not negotiating. It was not negotiations. My view was to listen, you take the effort of putting in investments on the ground, you take the effort of developing the product for the customer, you give him samples, and then it gets approved. You go through the entire process. You make the product as per his print, as per his drawings. Then you're entitled to make a reasonable margin on it.
Yes.
You are not here. In fact, in the automotive industry, there's nothing called value chain. There's only a food chain. The smallest of suppliers are left holding the maximum risk in the system because they've got the least visibility with respect to schedules that the customer would give them. They would go and build capacity on the ground. The customer will be optimistic best when he tells the lowest guy in the system to say that, listen, why don't you invest in 3 more machines? Okay. He will go to the bank. His interest rate are the highest in the system, in the value chain. Yeah. He will hold the maximum risk because if this guy does not give him the business and his capacity utilization is not there, his margin of safety is the lowest. Okay. So that is the way this industry has been operating, or many manufacturing industries operate in this country, whereas suppliers are, unfortunately, the lower you're in the chain, the higher riskier your operation is. Unless you're producing something which is very, very unique, where you get away with your margins. Okay. So
you started your career suddenly after your dad expired in the OEM or a supplier space. And then 10 years later, you came back to that somehow as an investor and then got into the business. How long did you continue in that field?
You turned around your business, yeah. So then the business started making money. So for the first time, it was EBITDA positive. Okay. And then we said, listen, what do we do? Because this business is about scaling up. While you can't, rest on your laurels and say that, we made money this time, therefore you can't sustain the profitability if you don't grow. It is a volumes-driven business. So that meant that we had to invest more and increase capacity. But then the 70% owners, the business, were unwilling to do it. For them that, I had come in and put in the effort and even turned it around was big enough relief for them.
Okay.
So that was my huge learning that, we should have negotiated to at least get into a situation of control at that time. Moving it from 30 to 50 would not have been a problem at all. Okay. It would have been very easy given the situation they were in. But it never occurred to us that, that these guys would not have the vision to scale the business. Right. So on paper, I had this designation called chairman of the company. I don't know what it meant. So we would have meetings. We would have regular meetings. In fact, we had one of this, the original promoters' friends was running a tool room in Germany. He was very keen to have come for a discussion and then say whether we could do a joint venture or he could acquire this unit. He didn't even come down. The fine gentleman from Germany. So we had a discussion. And then we didn't agree on the price. I thought he should have paid us more. Then he said, let me come back to you. I think then he had other problems. But I think we had a lot of segues to grow. We needed a lot of commitment, which the 70% guys are unwilling to do. I realized at that point in time, it was their ways of working, which was the reason why they got into the problem in the first place before they approached us. Okay. So it was an eye-opener for us. It was a learning for me. Then what I did was I negotiated with them and I got my money out of the place.
So you didn't make a profit in that, in your investment, or did you make some nominal profit?
No, a marginal profit does not even cover savings bank interest rates. Okay. For what
So you went in, turned around the business and just about escaped with your money back.
Correct. Exactly. And the reason I got involved was to protect my principal. I came out turning the business around and therefore protected my principal and then got out. That's all.
Okay. And just remind me, so when was this in terms of the years or era?
This will be 2007 to 2009 or 2009 to 2010. We spent 2 years.
So this was like post-Lehman, but then the recession hadn't hit India by then, if I roughly recall, in 2009 and 10. They were just the...
Lehman was, we were fairly... closed economy even then, yeah. So
exactly. I remember I was in the UK at that time and everything like literally shut down. And then all my friends in India were like, what? I mean, we are all doing fine. Of course, after that, India had its own problems, but that was different reasons, maybe exacerbated because of the Lehman.
Okay. We had some exposure, right? Yes. Some of our banks had got some ABS or NBS exposures of some banks, some write-offs. But nothing major that affected our system. Only thing the stock markets tanked is that people made money on the rebound, big time in India.
No, absolutely. And the stock markets, if I recall, they tanked not because of the Indian stock market or the thing, but because the FIIs just literally had to withdraw because they were exposed on their other assets. So.
Exactly. They were deleveraging had started, right? So they had to actually pay down debts and therefore they had to pull out because typically the first casualty is pulling out of India whenever there's a problem. Yes. So that happened.
I missed that cycle because I was of the same opinion, except back then I had zero money.
Same here, right?
I had zero money because
I think I had less money on hand and a little bit of fear also. Now in hindsight, I understand what happened. In those days, I think the general that it also functions the people you talk to, right? People you talk to are generally negative and pessimistic, wondering, we don't know what will happen. Then it also holds you back a little more. That was my learning. I think you should follow your instinct and your gut. That is my
Well, that may be for you, but I was like so leveraged. In fact, I would love to say, but I won't be honest. So I sold 80% of my equity portfolio in around June to August 2008, just 1 or 2 months before Lehman happened. Now, I'd love to claim that I knew that they were like all these global storms about to happen and the stock markets across the world will crash. But for me, August 2008, I ventured out to London to do another MBA at London Business School. I needed money to actually live. So I had to sell off my equity. Of course, it's another story what happened with Lehman and in London after that. But then this episode is not about me. It's more about you. So tell us. So you got your money back. What did you do with the money or in your career?
Then what I did was I said, listen, let me do a lot of consulting work. I think I've got some varied experience.
Wow.
I said I'll work with a few companies, advise them, and if required, I'll do some fundraising for them, be it debt or equity. Okay.
Right.
So I started doing a lot of those kind of engagements. See, fundamentally, I believed at that point in time, Middle India needed help. SMEs are a huge opportunity. And I was very, very bullish about MSME as a sector at that time. I said the top companies will figure out life. They know how to go and raise money if required, and they have got access to the bulge bracket investment banks in any case.
Yes.
Can you not be the bank that, helps out MSMEs in this space, right? So, but I was very clear that I did not want to run it at scale. I want to understand the client's business well, which meant that if there's a consulting gig, I will do the consulting gig and then, do a transaction. So I have done M&As, for industrial companies. I have done fundraisers for IT services companies. I have done consulting engagements with IT companies. In fact, interesting engagements, which I had no past background in. But I would go and pitch this and tell them that, listen, I think you should do this. And therefore, I did one performance aligned system for a large IT services company. I had no background in this, but I somehow felt that intuitively, I think, how do we set goals at each level that dovetail into the superior's goals and therefore into the company's goals? It was just that system, right? So I did that piece. Then I told the same company that, you get carried away because you're growing fast. People show you deals to acquire and all that. Are you really ready to do an M&A? M&A preparedness study is another project I did. I said, no, let me go on and talk to everybody in your system. Different business areas, different units, understand what their burning issues are. Do they really have any bandwidth to absorb or digest another unit if it comes by, right? And will they be successful in doing it and all that? So in fact, my submission to them was, I guess, guys, you're growing at 40%, but I don't think you guys can actually digest even a small acquisition.
Yes. Yes.
You will probably muck it up. So go slow on this. Till you build capability, how you will go about integrating a new business that you acquire. You don't have a plan today, nor do you have the bandwidth. Or you go forward and set up a team if required, and then learn the ropes and be comfortable that when something happens, you can lay the pipes for integration better internally. Right? So did that work, then did some fundraisers for people. Then for a brief while was toying with the idea of doing something in solar. So ran some financial models around solar thermal specifically, not just solar PV. But it was also a time when the entire crisis in the Indian economy was brewing, right? Infrastructure was going through a very bad phase at that time.
So this was 2011-12, is that correct?
11-12, correct, 11-12.
Yes.
Right?
Yes.
So the beginning of the problem, if you ask me, 11-12, wherein it's a consulting plus investment banking business. I did a few transactions. Then I remember doing one large transaction in the auto component space for somebody. And then parallelly, I also raised capital for a digital marketing services company, which was into customer analytics and campaign management and customer experience. As part of the fundraise, I think the promoter group said, why did you join the board of the company? So I said, sure. Because I also knew the capital provider, who was a batchmate of mine. And he was also okay with that, saying that, listen, somebody like you would help because you're known to both sides. And I did that. As a part of that, what happened was we were supposed to do a joint venture with the TVS group in Chennai to build a auto-focused CRM and analytics business. All right. So I got the entire JV agreement going. It was actually getting stalled for a bit. I got it consummated, and then, we started the business. In about 6 to 8 months' time, the business was tottering. Okay. And since it was based out of Bangalore, then I said, listen, why don't I get involved? Maybe I'll do 2-3 days a week as a consultant and then try and put it back on track.
Sorry, what was the name of the business?
This business was called AutoSense.
AutoSense, okay. So again, back to your auto roots.
A little bit of auto roots, yeah, correct. And then AutoSense was a services business focused on serving Indian OEMs at that point in time. And I got in and it kind of sucked me into the business, to be honest, right? And I initially thought I'd spend 2 or 3 days a week, but that didn't stop at 2-3 days. It was close to where I was living. Therefore, I would just walk across in the morning at 8 o'clock and come back only at 8, 9 in the night. So it was an intense 3 years that I had there. But I was very happy with what we achieved, right? We had a customer who was unprofitable again. So it was very clear that we will let go of that business. So we shrank our revenues by 25% in year 1 after I came in, which is basically the second year for the company, and shut down one facility and said we will grow again after we get our focus back. And this time I said that, listen, we will not do services in India. B2B in India is a mug's game, to be honest. Okay, you don't make money. And the customer will perennially be dissatisfied because you use it as a negotiating tactic when it comes to a price discussion all the time. Then he said, we'll develop a few products which are relevant and operate it like a managed service. So we built a product around the roadside assistance space. Okay. So it was an incident management software. And we would offer that coupled with our call center operations as a managed service for RSA providers. We used to work with the largest RSA providers in India. That was one. Then we built a loyalty platform for OEMs wanting to build them, roll out the loyalty programs. We are running one large loyalty program for an OEM in any case, for a two-wheeler OEM. Then we also built what we call the connected demand stack for automotive, which is what we presented to NASSCOM, because of which we got awarded as one of the emerged 50 companies in NASSCOM. So fundamentally, from being a services company, we moved away into big products, and then we said we'll build a platform. Okay, and that gave us a lot of credits in the market for a small company like that, right? To be noticed by, say, an M&M, for example, at that time, where we're up against competition against, say, Accenture and Bosch. So they picked us over the other two to build their, I would say, multi-segment IoT platform. When I say multi-segment, it was both for their farm division and their trucks and buses division. So the entire platform which ingests data from the CAN bus of the vehicle, you build a data lake, you build cloud-based architecture, and then provision the entire thing through microservices, downstream then through microservices, was done by us. We had
I know in 2024, it doesn't sound like path breaking, but this was like 2015, if I got the timeline right? 2019. Yeah, 2019, doing this stuff was still way ahead, at least definitely in India, even if not globally.
No, absolutely. So much so, I think we had interest from a lot of people because we were the only ones doing it, to be honest. IoT for automotive, multi-segment, none of this was ever done before. And the truth be told, I think, we got lucky in getting awarded this. Because on paper, we were a very small outfit. It's just that the discussion, I think we spoke a lot of business sense and we said we will get it done. We showed more commitment and intensity. And we had no clue how to go about doing it, to be honest, right? It was a fixed bid project. We quoted a figure. We got it. Then we were figuring out that, oh, listen, you're going to lose a ton of money by doing it. Then we went back and said slowly, listen, we're doing something more. We need to adjust the price. We finally moved the price from X to 2X over a period of a year and a half. Okay, and made money on it. But more importantly, it was tremendous learning for the system. Right? Tremendous opportunity. In a market when you're doing B2B domestic, retaining talent in Bangalore in the technology space is extremely difficult. Right? The only peg that we had was to say that, listen, the kind of work you get to do here is not something that, a company that pays you 2X will ever give you for the next 5 years, given your experience. So it was a business necessity. It's not strategy, according to me. Early responsibility to somebody was on account of the cost structure that you had. Right? Get a good guy and then give him early responsibility and tell him that, listen, why don't you do this? Because, we are here to back you up. Right? And you have all the freedom to experiment with what you want to do. So we did that. So that was actually a big feather in the cap. And post that, we had discussions with Japanese OEMs who were trying to build their incubation platforms in India. They've come and met us. I won't take the name here, but they came, they met us twice, thrice, and all that. While all of this was happening, unfortunately, COVID happened, right, in 2020.
Yeah.
So that time we had to make a choice. It's not that any of our business. In the meanwhile, we had also got one of the largest Indian OEMs to work with us as on a retainer. Okay, they wanted to launch a new SUV, which we helped them do on the digital space, and there was a little bit of a concern that whether these revenues will hold. So we had to take a call as to which way we will go. We're a very small company at that time, right? When we were EBITDA positive and all of that. And then I had a discussion with the promoter group, and they said that, listen, the intention was, they were saying that this is no longer a services company. It's now become technology-led, and the path is different. So we take some strong bets around this. It will be a 0-1 kind of a situation. It's binary in nature. So you take a call. And then they turned back and said, listen, we'd rather have this as part of our overall marketing services play that we are part of. And, that's the way we want to do it. Then I said, no problem. Then anyway, I came in accidentally to try and set right the place. My job is done. I'll step out. They said, that's fine. But then they asked me to continue on the board, which I do till date, if you ask me. Right? I'm on the board of all their subsidiaries. And the main companies got listed as well about 3-4 months back. Okay, so then I came out. Then I did a consulting gig with a large B2B e-commerce company on their value-added services side, which was into, B2B e-commerce in the distribution space, right? Food and grocery. It was Udaan, yeah. So I did work.
So you were working with Udaan?
No, I was a consultant. I was helping them.
As a consultant. Okay.
As a consultant. I was working on a specific project on their value-added services side. How do we build retention amongst their retailers whom they are servicing, right? Because churn was high. So it's not about always providing quantity discounts and all of that, but how do you ensure you build a relationship? And what could be the various points which you could enable, which will drive those relationships, which will drive relationship building and therefore drive loyalty. I think that was the subject. So I did a project with them for about, 6 to 8 months. Then I moved on to another company called Zenoti, which is a B2B SaaS company, which is one of the unicorns. But they are into the salon and spa space in the US predominantly. Right? Fundamentally a CRM system, which is basically an appointment management system. Finally, they deliver the customer to the payments piece. Right? So I was effectively as a consultant looking after the payments business. Okay.
So your angle as a consultant here for both of these companies was payments, and because you brought that knowledge base doing payments. Is that right? Or was it something more?
Udaan was not payments. With Udaan, it was more about business strategy and the fact that I'd worked on, I would say, membership and loyalty programs before. Okay, so therefore, what can one build to ensure there is better retention and loyalty? With Zenoti, I think the problem statement was, listen, how do we reimagine this entire payments business that we have? Should we start launching a few embedded products, which could be on the lending side, to different constituents in the salon spa ecosystem? For example, can you do something with a stylist in terms of early wage access? Can we provide them with that? Can we also look at providing loans to the salons and spas? Is it even feasible to begin with? Or are they well serviced already by other people? And how can we ensure that the entire payments pipe is also optimized in terms of margins without compromising service delivery as far as clients are concerned? Because you work with...
Shiva, I'm very curious. I mean, this is like a completely different sector for you. You worked in auto, you worked in leasing, but salon spa is like, how easy or was it to get attuned to a completely different revenue model and a market structure?
Well, I don't want to, say it was easy. At the same time, I didn't find it to be too complex either, because for me, if you abstract a problem, then it's just, you're solving for what the requirement is. Here, the only difference was I had not worked with any payments business in the US geography. So for me, it was a great experience sitting in India during COVID, from the comfort of my laptop, talking to people to understand what's happening there, right?
Yes.
And the US is a completely credit card driven market, right? 80-85% of all payments still happens on the credit card guardrails that they have, right? Payment rails they have. Unlike India, where UPI is predominant, right? Today, all my small payments are done only on UPI because there's no MDR. MDR is zero. And then you had the structure where you work with the payment networks, Visa and Master. Then you've got these, I would say, payment aggregators like Stripe and Adyen there. We used to work with both. Then we used to work with, And then the point is that the entire value chain is so rich. For just being a reseller for a payment processor, you end up making about 40-50 basis points on a transaction, right? Which is huge. Your average ticket is about $100, okay? So you make a lot of money there. And it's a very profitable part of the business. And so we had a plan. Basically, in financial services, all that I understood was, from my past experience, most financial services businesses are regulated. Right? They have regulation. So you can have a vision for what you want to do across geographies, but your strategies have to be extremely local. That each geography needs to be managed very, very differently, because there's a very different ecosystem there, a different set of competitors you're coming up against. And you can't have a uniform policy on pricing. You can't have a uniform policy. Wherever it is possible to procure across geographies, leverage the maximum possible value. Otherwise, your go-to-market in terms of customer acquisition and servicing has to be extremely low. I think you need to get this kind of thought process into the team's thinking, more importantly. Once they internalize that, I think, they understand that this is the way we operate. So in a way, I think a lot of my stuff has been about being curious about new areas, trying to understand what's happening. Two, looking for, I think most problems are very simple if you identify the problem, right? To that extent, you have to have a certain amount of experience, I guess, and the ability to abstract the problem, number one. And along with that, I think what is very important is to be intellectually honest, right? I think that's a very important ingredient when you say that it is what it is. Sometimes you see the patterns because you worked across different sectors or different categories. Sometimes you miss the problem as well. No problem with that. But I think that's the way it works. I think that's always been of great interest to me, to understand new sectors, new categories, what's happening, and all of that. I think that's the one common theme.
No, and I can speak as an ex-consultant. I can speak as an ex-consultant myself. And a lot of my close friends who work as a business operator, and they're very skeptical about you guys have always gone from one sector to another without knowing, and then suddenly you go there and then teach the people how to operate. And my answer has been like, there are 2 or 3 reasons why consulting. Now, obviously, that intellectual honesty is a must. Absolutely. Because sometimes, and there are, I know a lot of projects and consultants and how things operate where they're not really contributing to the client. But for me, firstly, having that detached opinion where you're able to take that step back, which is very difficult for someone who's working on a day-to-day basis. Either because of bandwidth, or because you're just too close to the problem to be able to see.
Absolutely. It's
and
more
then,
the latter.
Yeah, it could be either, but yes, it is more the latter. And then for me, the second part is having seen a problem in one sector, there is as long as you think very structuredly, you can apply the same thing because the basics of business are the same at the end of the day.
Absolutely. You will see the same kind of.
And finally,
this.
Yeah, it took me 15 years to even understand double entry in a P&L. I know you did it in like a few weeks.
No. I didn't.
But I know it took me 15 years. I was forced. I was forced. I just decided to turn a blind eye. But at some point, it took me and I got into that routine. But I can tell you one thing. If you understand double entry, then that is all there is to business. There is an inflow. There is an outflow. Then you break down the inflow, you break down the outflow, you see what is connected. And now I know this is sounding very simple. It's a bit more complicated than that, but that's about it. You just see what drives which line. And either you take something out or you add something in which is missing.
No. On a more simple.
That's my nutshell. So I think there is a lot of value. You've been doing it as an advisor, as a consultant for a number of companies. So
you know what happens when you do offer consulting? When you offer consulting as an organization, right, doing consulting services, then your cost pressures take over. And then you're not able to look at it as objectively as you want to. Okay? Because I think that is what large companies suffer from. Large consulting firms have this problem. I think they'll do a fantastic job in terms of operational consulting. No 2 ways about it, right? Because they've got processes that they need to be cleaned up, need to be reimagined, need to be rolled out again, all that. I think they'll do a great job of that. When it comes to strategic stuff, with large companies, they'll do a brilliant job again, right? Because large companies have got multiple moving parts, multiple divisions, far more resources. And, there's a different way to orchestrate the entire thing to move in a different direction or do something else. But when it comes to this mid-market companies, right, it's completely one single person on the other side, which is the promoter, right? And sometimes understanding his motivation is half the problem that you solve for. Because the what you think the company should be doing will not see the light of the day if the motivation of the promoter is not aligned. Right? And because the buck stops there, because the rest of the company, nobody takes decisions. And the rest of the company will take operational decisions. But when it comes to key issues, it all, bubbles up back to the promoter. And that I think always going to be fascinating, because there you can't use a very structured approach to problem solving. It needs to be multiple conversations, understand, what he has to do, and then slowly nudge him to doing what is right. I think that's been my...
I think that's another dimension of the same principal agent problem. There's the company and there's the promoter, which in all these SMEs, you can think they are one and the same, but they aren't. They are different. They've got their own reasons. I would actually extend that. There are some companies, and because in consulting, I've seen M&A and a lot of acquisitive consulting is what we used to do. And I've seen it from the private equity side also for a number of years. A lot of big companies, corporates, listed, there are CEOs who are like empire building CEOs. And then even when they don't really need an acquisition, like I think you were relating in some of your previous experiences, there are companies who want to acquire, but they can't digest that acquisition and they end up burning cash and all that. As a consultant, if you are part of a big firm, you just take that project and let them do it. Also thinking, to be very honest, ki boss inse hone nahi wala, I will get that PMI project also.
Right. Yeah.
That is how all these consulting.
because there your opportunities are different. And I think, a lot of the M&A activity is not based on what the corporate agenda is. Yeah, it's actually driven by some individual agenda somewhere, right?
Yeah.
Somebody decided, I want to pick up this target for whatever reason, right? He gets it done. Because empirically, you'll know, I think, 40% of all M&As fail globally. Everybody knows that, or 50%. I don't know what the number is, for a whole host of reasons. But yet people continue to do M&As, right? They don't stop it.
Yeah.
They always believe that they will not be part of that 40% or 50%. They'll be the outlier. It's like how everybody in the batch says that, listen, don't join Citibank, but it'll fall on deaf ears, because everybody will feel that, no, I will still join Citibank, and then figure out, that it's going to be great for me. It's that.
Yes. So Shiva, if I understand, so you've been doing this consulting and advisory work. Is that what you're still doing, or post-COVID did you stop?
No. So after these two engagements is when I got into health. So health has been a recent passion for me, right? For about a year and a half now, right? And I have now come to this conclusion that while I've picked up a lot of knowledge around the health sector, I think it's going to be very difficult for me to get this health insurance company off the ground, given the fact that, there is not much of appetite in terms of risk taking amongst the PE folks today. All right. The PE folks obviously will tell me that, listen, get me a proof of concept, and then we will come in at a later stage. But for me to get it off the ground, if you're not a licensed entity, it becomes very difficult to play this game. I even tried the OTT route.
Give me a 2-minute pitch. What are you actually trying to do? What does your company or your startup, what are you trying to do? What problem are you solving?
What you're trying to do, and what we might end up doing. Two things.
Right.
We are trying to actually we are trying to disrupt the group insurance space and move the entire thing into individual health insurance, because I think that is our fundamental belief, right? But for that, we need to get a product off the ground. And to have the product, you need to have a license. If you don't have a license, you go and tie up with somebody, right? The tie-up with somebody is happening at a very, very slow pace. Well, there's interest. There is no will to close it. Also because of their own problems that they have in their business. Whenever something becomes center of plate, then it gets pushed to the back burner. That's what I've been noticing for the last 6-8 months. So in my head, even if we go out and sign something with somebody, I think we might not progress, because I think I'm not too sure of what the ride is going to be post that. What I'm currently thinking of is that, listen, healthcare financing seems to be a big space. Should we pivot to doing that, which is basically premium financing? If somebody wants to buy insurance for the longer term, can we get them to can we offer them a financing solution at that point? 2, is there an opportunity to actually do claims financing? Because the biggest pain point people have is that at the time of discharge. After you're getting discharged, if you wait for the insurance to settle the claim, it takes 3 hours, 4 hours. At that time, your asset is fatigued. And then if you're able to just tell the hospital that, or this one saying that, listen, here is my payment system, let me swipe and get out. Let us settle this later when we're at the time. I think that's a huge benefit. There are some barriers to doing it, but we still think there's an opportunity there. So that's something
claims financing, is that the health insurance counterpart or analogy to what in many other industries is called inventory discounting.
Mm-hmm. No, that's a B2B.
That's a B2B thing. But to me, this seems like the same thing, because the financer is also going to take the risk on whether the insurance company will ever pass that claim, or will you pass on that risk?
Correct. So, for example, if you, this hypothetically speaking, if I am the customer, if I have an arrangement with my insurance company, and wherein there is going to be X% of the claim that I need to pay upon, but then that will get known only after the insurance company negotiates the bill with the hospital, right? Typically, because there's a to and fro on that. Notwithstanding standardization of package procedures and costs and all that, they always get hit with some 2 or 3 line items which are over and above what was agreed upon. Which is why even in a cashless facility which is pre-authorized, the insurer never signs off for 100% of the procedure on day one. You sign off for 60-70% of an estimated value, and finally close it only at the time of discharge, or rather post-discharge. Not post-discharge, at the time of discharge. Because while the doctor signs off in a discharge summary, and the discharge summary then goes along to the billing department, together it goes to the insurer, who then looks at it. Obviously, the TPA is the one who's fronting for the insurer. It takes about 3 hours for them to, come back and then say it's okay. And that is when you're itchy to get out of the hospital. Right? So if there is a mechanism by which you can say, listen, here is my card, it's a blocked account or whatever, figure it out, guys, and then tell me later, and then we can discuss. So is there some exposure that you have? You have some exposure, but you'd rather say that, listen, if there's a copay involved, I would rather swipe and get out. Right? I'll have a credit line with my payment system provider. It could be a credit card company that I have who's got a sublimit for hospitalization, for example. Right? That eases my experience, or it makes my experience better at the time of discharge, which is what you're talking about.
So Shiva, tell me, you had very varied sectors that you had an experience in over the last 25 or 30 years.
Yeah.
Why health? Well, what made you get into health recently?
Health, I told you, during COVID, I saw the entire industry not stand up above us.
So it was like,
at the stage of my life, I said that, listen, I moved away from insurance 15 years back. The only product that I always was interested in was health insurance. But in 2007, this was not a category that was actually a focus category for any insurer. They're happy doing group insurance.
Yes.
Insurance had not taken off at that time. Right? The so-called standalone health insurance companies were just about getting started at that time. Right? That is one. And two, having done multiple things in my life, health also, in a way, for me, saying that, listen, we've done all the cute things in life, the smart structuring deals, everybody has shown their credits as bankers and investors and all of that. Health seemed to be something that I could spend time doing. I could see myself spend time working on for the next 10 years or 15 years, because there's so much to do there. The enormity of the challenge is interesting. And two, it also helps. I don't want to sound altruistic here. At the same time, I think there is a sense of satisfaction that will give you, that you're working in this space.
Very nice. I think that's very well said. I mean, just you using all your experience in the insurance business, even though you never got into health because the market wasn't opportune, but then using that experience, putting it on the post-pandemic era and seeing the problems at the grassroots level, and then putting two and two together, as well as adding the third layer of impact. Very well said, Shiva. So Shiva, on that note, now I understood what you're doing right now, mainly because you took us through a beautifully structured case study. You made me understand health insurance. I know I've been a healthcare investor for more than a decade now, but I never understood insurance because I never needed to. I've never invested in the insurance part of health.
Okay.
But I think, and not just understanding it, I think if I can understand it the way I see it, I think all our viewers are going to, once they see that case study, they're going to leave a lot smarter. And maybe some of them will make their next million or 10 million using some of your tips on what they should either invest in or start up in. But I think the most important part of me, Shiva, was your 25 or 30 years of career journey, both before IIM and after IIM. And it almost took me through like a time warp of seeing the evolution that where you started from, whether it is dusty Chennai and suburban roads, and right down to certain AC financial offices, and then continuing to reinvent yourself in different sectors and in different types of roles. And I think that was an amazing journey that you took us through. So on that, Shiva, thank you so much. Thank you for being part of our episode. Thank you for sharing your story with our viewers. And most importantly, Shiva, I know it is very late in India time. Thank you for all the time and the effort you've made in our episode.
No, thank you so much, Migs, for this. I never knew that anybody would be even interested remotely to know what my career path has been till now. So in a way, it's been therapeutic for me to talk about all of this. It made me put a structure to this. In fact, I made some points. In fact, I actually started listing out, my different experiences, and I counted 15 or 16 of them, right, in order. All right. And then I said, okay, is there any commonality? Is there any difference? And is there a story at all? I didn't find much, to be honest. The only common thread I found was that, listen, the willingness to keep looking at new things all the time and seeing if there is a play or not. Right? So I don't think anything that I've said is going to be prescriptive to anybody, nor should it be prescriptive. If at all, if there's a bunch of experiences that people can relate to and derive some insights, I would think my engagement with you is well worth the time. Thank you so much for this opportunity.
Thank you, Shiva. I'm very glad to hear your words. And for our viewers, if you're still watching it at this point, which I hope you are because you've been learning from Shiva, then please like and subscribe this as always. But if you haven't shared this, if you know someone who would learn from either the sector or from Shiva's career journey, please also share this episode. And on that note,
and if any of your subscribers are interested in having a chat with me, most welcome. Just ping me and then I'm happy to engage with you.
Thank you, Shiva. They'll probably, so put your comments if you have any questions and Shiva can see them directly or we can pass them on to Shiva. Thank you so much for that offer, Shiva.
Yeah, okay. Thank you, Migs.